there's a 90% drop in provisions year on year. I just wanted to understand, because that's a huge drop. Can you explain why that 90% drop has happened? I know asset quality is good and everything, but if you can explain, because it's a huge drop. Hello?
No, sorry, Ajay.
Yeah.
So you're talking about the drop. I think, yes, the total provisions during this quarter has been less than 100 crores compared to of 891 crores in the previous quarter. We have seen some improvement in quality of the portfolio and also certain corporate recoveries which have come from written off accounts. And we have also not utilized the contingency provisions. So I think we are very careful about our asset quality. And but adjusted for these, one-offs, etc. And normalizing for agri loans, our normalized credit cost has been under 50 basis points for FY26. So we will see how it goes forward, but we do expect to maintain a healthy trend line, and we are monitoring the current economic environment very carefully. There's nothing specific to call out during this time.
Okay. So basically, if I say that the drop in provisions was mainly because of asset quality being good, is that correct? My understanding is correct.
Which is one of the aspects. The second is we had certain recoveries from the written off accounts. So it is both these.
Okay. My second question is to do with deposits, sir. We have seen deposit rates falling quite substantially in the last 6 months or so. With the current situation that we are in, liquidity and everything taken into account, how do you foresee deposit rates going? Do you think that the rates could go up?
It's very difficult to make this, but I mean, at the end of it, both lending rate and deposit growth move in tandem. Of course, some of it happens with a lag. So we will. As far as we are concerned, we are just focused on money in the bank. So we try to get both current account, savings account, and deposit accounts. So, and our focus has been largely around, quality customers and try to become the primary banker and try to get a good share of customers' wallet. So we do hope that, and we do hope that continues. And then this happens across a range of customers, whether from retail business banking or corporate banking. How the interest rate moves is largely dependent on macros, and given the uncertainty at this point of time, it's very difficult to make a long-term call on this.
Okay. All the very best, sir. Thank you so much.
Thank you. Next question is from Ankur Mishra from ET Now Swadesh. Please go ahead. Ankur?
Good evening, gentlemen. I want to get your comment on the net profit numbers per se, which has grown 8.5% YOY. How much is it driven by lower provisions versus core income growth?
Sorry, you come again? You're talking about the?
Just wanted...
you're talking about the NIM?
Net profit numbers. First of all, guidance of
our core operating profit for the year is grown by about 7.7%, and for the quarter at about 5.1%. The profit before tax for the year grew by 5.8%, and the profit after tax for the year again grew by about 6.2%. So I'm just talking of the yearly numbers. For the quarter, you will see that the core operating profit grew by 5.1%. There has been a decline in provisions, which I just talked about, by 89%. And profit before tax, excluding Treasury, has been about 10%. So there has been hardly any change on the Treasury income line.
Right.
Does that answer your question?
On the NIMs, you have maintained 4.32%. Have actually margins peaked in this cycle? And overall, on the growth also, including advances growth in the current scenario, you think that will be sustainable?
Of course, the interest rates, we have been able to maintain margins. Very difficult to say about the future, given the fact that the NIM trajectory will depend on a number of factors, including geopolitical developments on the domestic economy, liquidity, deposit rate, and of course, competitive intensity. We do expect NIMs to be range-bound in FY27. From our perspective, we continue to focus on risk-calibrated operating profit, which we have been saying for a long period of time. And as the Indian economy continues to grow, we do have the liquidity, the capital to leverage our franchise for good quality customers. We'll remain focused on this, but at the same time, we are mindful of the developments that are happening on geopolitical side, and we'll keep a close watch on this. So our approach on risk-calibrated growth will continue as it has been in the past, and within this framework, we do see reasonable opportunities coming our way.
Thank you. We'll move on to the next question from Piyush Shukla from NDTV Profit. Please.
Good evening, Mr. Batra. I have two queries for you. First is on the momentum of you have posted a strong loan growth in Q4. What would be your guidance in terms of both loans and deposit growth in FY27? The other question I wanted to understand, you are the second largest private bank and have a fair view of how macros will be impacted, the second and third order impact from the Middle East conflict on banks' balance sheet. Can you give us some color? There are expectation that the petroleum prices may rise, input costs may rise, there could be supply chain issues. Eventually, it will end up on the layman, the end customer. Do you see a material sort of impact on banking, banking industry in the next financial year in terms of asset quality, and what are the pain points?
Piyush, I mean, it's very difficult to make a forecast in this day where forecast validity is not even a day at this point of time. But given the overall scenario, there has been an immediate impact on market yields, which you are aware of. There has been an impact on currency, equity prices, and some of this is reflected in the numbers for the Q4. Of course, during the Q4, there was a very little period of the West Asian conflict. We will continue to monitor these indicators. The impact on economic growth and potential credit demand will depend on the duration of the conflict. Of course, even RBI has mentioned that there is some amount of uncertainty on account of supply shock. We do hope things become better sooner. As far as we are concerned, we do have a strong balance sheet in terms of liquidity, provisioning, capital, and a good technology architecture. And we will continue to leverage our franchise and grow within our risk parameters, and we will continue to monitor developments across. So given this scenario, I think, we have been saying we look at risk, we look at profitability, we look at good quality customers, and what falls within our framework, we will continue to go within that area.
Thank you. We have a next question. Should we go ahead, sir?
Yes, please.
We have a next question from Hamsini Karthik from Money Control. Please go ahead.
Hi, sir. Am I audible?
Hamsini, can you use your handset mode, please?
Yeah, am I able?
Yes, please go ahead.
Yes. Good afternoon. Two questions from my end. One is that for most of the gone by fiscal FY20, we've had revenue growth in single digit and earnings growth in single digit. Should we assume that these growth levels, new normals for ICICI, considering the operating environment we are in? My second question is on SME loans, the business banking segment particularly. This has been growing at a healthy 17% plus run rate for most quarters of last fiscal. Given the geopolitical tension, and this is a segment where people are saying, given tariffs and the war impact, etc., one needs to watch out for asset quality. What is your commentary on the business banking segment? How do you expect this particular business to sort of shape up in FY27? These are my two questions. Thank you.
one, I just want to mention that we continue to see strong growth on the asset size and deposit mobilizations. The the profit growth is also a function of, the interest rate cycles, as you are aware. That aside, if coming back to the advances that you really talked about, I think the advances reflect the strong momentum of economic activity in the country, which has been supported by policy measures and a fairly stable policy rate. So within this framework, we have seen growth in mortgages, we have seen in rural portfolio, we have also seen some pickup in personal loans. During this quarter, we are seeing even some pickup in corporate loans. Yes, we have seen healthy growth in the business banking. And from our point of view, we look at a completely integrated approach. We look at coverage, we look at delivery, we look at technology. And for good quality customers, there are opportunities, and from our perspective, we look at customers on a 360-degree angle and a total relationship value. So within that framework, we will, within our risk thresholds, we are happy to grow within the overall environment. Of course, and as you rightly said, there are developments and the impacts of that could be, as and when they become more visible, we will be cognizant of it and take appropriate action, both in terms of growth as well as our risk measures. So we keep track of these developments very closely.
Is pricing in the favor of the bank right now, sir, both on the corporate as well as on the retail front? Does pricing power continue to vest with bankers, or are customers able to negotiate better deals on certain instances?
No, it's a competitive environment, and within the competition, you have to find the right price. And from our perspective, whenever we need to ensure that we get a good quality customer and a fair pricing. As long as both of these are met, we are happy to grow.
Thank you.
Thank you. Next question is from Shayan Ghosh from Mint. Please go ahead.
Hi, thanks, Vatra. The first question is, are you witnessing your corporate customers delay investments as a result of the uncertain situation? Are they holding back on investments?
It's too early to call out. It's too early, frankly. It's too early to call out. Just look at the quarter gone by. Most of the developments have happened in the month of April. If I just go back to what has happened on West Asia, I think we have to remember that the long-term story of India remains intact. We cannot deny that the developments of West Asia will have some kind of an impact in overall. But given the overall framework, I think corporate India will get back to growth.
Okay.
You can see that reflected in all the forecasts by RBI or even IMF. They know. Will there be a bit of a impact on the GDP growth in FY27? The answer is yes, but it is still going to be growing, and within that there will be enough opportunities for both corporate India and for us to grow.
Okay. The second is on your co-lending arrangement. What I wanted to understand is the NPA ratio there is much higher than your other portfolio, regular portfolio, which is slightly above 1%. Here it's close to 5%.
I don't think so. We give co-lending NPA ratios separately.
You have given the total portfolio and given the amount of NPA there, which is on page 8 of the financials.
Where are we?
Securitization.
I think we can get back to you separately. I don't.
It's just there on page 8 of the exchange filing.
Viewers, that's all the time we had on this edition. Before we went on to the break, before we go on the break, in fact, what you were listening to is the ICICI Bank conference call. And like many media persons asked the management whether they see any impact, material impact of the West Asia conflict on their books. And the management did say that while their growth remains stable, they will keep their risk measures in mind as developments in the Middle East take place. But that's all the time. Thank you so much for watching. This is Malika Mishra.
Most important, and you have to be bullish when actually markets are bad. In bullish market, to be bullish is not a big deal.
Should we look at blue chips with the same awe that we used to?
So even if you are the bluest of blue chip, and if the valuations are upwards of 50-60 times, and the companies are glorifyingly growing at 5%, just run.
The argument is being made that because of geopolitical factors, etc., valuable companies in India are available at rates they haven't been for several years.
Yes. That is what you should have independent mind. Market is going this side, left side, you should go right side.
By what logic am I going to sit there and talk to Jaydeep at Rebel and believe that the world is going to move to cloud kitchens as a word hadn't even been defined yet? Ajit, Ferlenko, furniture rental. We gave him $6 million. He took $4.5 million of that and bought wood and nails and started making furniture. Most companies we give money to turn around and give the money to Google and Meta and start buying advertising. But the chaos that we live in here on a day-to-day basis enables so much great opportunity.
You've been on both sides of the table, right? Asking for funds and then giving them out as well?
A friend of mine and I had an idea that let's build a digital music business. And this is forget iPhone, pre-iPods, right? So, and you talk about timing and the importance of that. We were so early.
There's no real compulsion for you having to come to India and start a business here.
And if my job at IIC was find new opportunities for us to leverage what we know to build, so look, why don't we go build everything we own? So in June 2005, again, not knowing anything about anything, I moved to India with a BlackBerry, a laptop, a sample term sheet, a sample diligence book, and they said, good luck, call us if you find anything.
Talk to me about Dunzo.
We weren't the right investor for something like quick commerce. I would say Dunzo did an amazing job as being a brand that people loved, really did a great job of creating a brand. They did a bad job of thinking about the
India will add 400 million urban residents by 2047. Think about that number for a moment. 400 million people. That's more than the entire population of the United States. And that population is going to be moving into Indian cities in the next 2 decades. Every road, every building, every drainage system, every cooling solution that we build for them will either lock in decades of emissions or lay the foundation for a climate-resilient nation. So the choices we make in the next 10 years are in the truest sense irreversible. And today's panel that we have with us here today brings 3 perspectives on what getting this right actually requires. We're joined by Aarti Nain, a senior advisor with the United Nations Environment Programme, India's cooling program, because in a country where temperatures already hit 50 degrees Celsius, cooling is not a luxury. It is a survival question. Shishir Priyadarshi is the president of Chintan Research Foundation and a former director at the World Trade Organization. He brings a rare combination of environmental and economic lens to urban sustainability. And with us, Dr. Samir Bhatnagar, a partner at KPMG India, working at the intersection of ESG and infrastructure, translating sustainability commitments into balance sheets and boardroom decisions. Thank you so much all for joining us today on this very, very important discussion, especially when we talk about the fact of so many millions of people who are going to be shifting into our cities and how cities need to expand, and how, and we're all seeing the construction boom that is currently taking place. So, Mr. Priyadarshi, I'd really like to start with you, because when we're talking about infrastructure, and we agree there's a need to shift from climate neutral to climate intelligent infrastructure, and this is something I think we're all agreed about, that we need our cities to be more, climate conscious. But what do we really mean when we say that? For the young people here, for those who are viewing this, what does that mean when we say this?
Thank you so much, Gargi, and thank you, NDTV. Lovely to share the stage with Aarti and Samir. Look, let me start with a very basic point. The minute we talk of infrastructure, aap sab log yahan baithe hai, what is the first thing that comes to mind? You will feel concrete, steel, that's what we are building. And certainly the things that will use that concrete and steel would be even regarded as even bigger polluters. So the minute you think of infrastructure, it's necessary for the growth of the country, but the first picture in your mind is one of pollutants, and obviously not sustainable. So I think the biggest point, so far we've done for decades, and people, trust me, are more intelligent on the panel than I am, so don't listen entirely to me. But what we've done for years is, we've got infrastructure and then tried to make it climate neutral. We'll construct a road, we'll have a building, we'll have a cement factory, or whatever is required, then try and make it climate neutral. And there, our success has been good at times, marginal at times, and quite poor at times. I think what is required is this sea change in the whole conversation. We don't need climate neutral infrastructure. What we need is climate intelligent infrastructure, as you're asking. Now, what is climate intelligent infrastructure? One which is not based on historical data, but which is looking at what you need ahead. It's not because we needed something which was, a more efficient infrastructure, but what is it that we need in 20 years' time? Similarly, the second very, very important part of a climate intelligent infrastructure would be to embed technology into that infrastructure. Technology that will make your infrastructure more efficient. It will recover the initial higher cost, as just been talked about, but much more importantly, it will not be set in stone. It will allow adaptability depending on the kind of infrastructure. And finally, the third point, which will certainly make it far more intelligent, is you don't make it just climate neutral in the context of sustainability, you also make it resilient. So you've got infrastructure which is climate neutral, but has got resilience built into it, whether it be to local climate conditions, etc. But the list can be long, but I'll stop for the minute here, so that just to get all of you thinking over the course of the next 35 minutes, how important it is to bring in the word intelligent infrastructure into the debate of climate.
That's right. And Ms. Nain, I'd like to come to you next. And the global sustainability architecture is only as strong as its national implementation. So what does UNEP's work in India reveal about the gap that we currently have in the country when it comes to international sustainability frameworks and the on-ground infrastructure reality?
Thank you. Thank you so much for having me on the panel and with such great co-panelists. There's no straightforward answer to this because UNEP works across a spectrum of areas. We are looking at circular economy infrastructure. We are looking at heat resilience to sustainable cooling. We are looking at sustainable building materials. And each of them are not just governed by the overarching frameworks like the Sustainable Development Goals, but they all have their own internal frameworks, sector-specific frameworks. And in some, India is actually a leader, at least a regional leader. For example, clean energy, as Ms. Chandra was just saying, that we are really far ahead of the curve. And there are others where we are lacking. The gap sometimes exists not in the ambition, but in the implementation, and that happens because of a varying number of factors. One is the informal nature of our urban infrastructure, and it's very difficult then to regulate it and to track. So, bringing any new regulations for it is not easy, and then tracking any improvements or sliding backwards is not easy. Secondly, there's a data gap. which is not helping us in implementation or not helping us in implementation as fast as we would like it to be, is because the data is not always there to measure our baselines and benchmarks and how we are proceeding and progressing. So that's a problem. And I think it's also the institution capacity which is not helping us in implementation. And it is not as if both the public and the private sector is not investing in building these capacities, but it is just the scale of our country and the diversity of it. 400 million people, I work more on urban infrastructure. I think 300 million people are still in what you would call vulnerable levels. And I think 60% of our country would be urbanized. They need that infrastructure. So the scale is huge, it's diverse, there's a mix of rich and poor. And the cities do not have the capacities and the institutions, whether it is public or urban or rural or private, they do not have that capacity that is required to achieve the scale and the ambitions that we have set. But we are moving towards it. I work across multiple states.
Right. In fact, I wanted to ask you, ma'am, in your dealings with local governments, local administrations, do you find them conscious of this concern that we again and again here at NDTV when we have these conferences which we talk about, but are they at their level concerned and very conscious of this?
Very concerned. It's their biggest concern is they want help. Whenever UNEP goes, it's like, can you help us in doing this? Can you increase our capacity? A lot of the funding that we have for within our programs is dedicated to fund, you can call it training, capacity building. They want internal capacities to be built, institutionalized, embedded, but they also want the private sector to be trained to take up this work further. And they also want a lot of civic engagement and be enabled to undertake that citizen and civic engagement. So yes, I would leave it at that. I mean, we are there in certain cases, but there's a gap in others.
Right, and which is why conferences like this are very important, that people learn more about these issues and the need to be engaged. Dr. Sameer Bhatnagar, let's now talk about the private sector. And ESG due diligence is rapidly reshaping how infrastructure projects are financed and appraised. So what are the most significant ESG gaps that KPMG is seeing in Indian infrastructure projects? And how are global capital providers responding to this?
Thank you for having me on the panel today. And I think it's a very interesting question around ESG or sustainability due diligence for projects. Yes, there are established frameworks. And when we look at large projects, they will undergo the required diligence in terms of environmental standards and how they kind of conform. But I think that when we talk about infrastructure, it's also about doing that what happens to the smaller projects. Because the minute we talk about the core infrastructure itself, the cost of capital in India per se for infrastructure is expensive. The minute we talk about various compliances, as was mentioned in the first panel, that around 60% of businesses in the SME sector, right? A lot of our cities are still small in scale and size. A lot of our city projects, other than let's say a large metro, are very small in size, including some of the water supply and such projects, right? So when the scale is smaller, the cost of ensuring a lot of the project administration work, etc., is also quite expensive for them. So while the larger projects are undergoing those, the question of what happens to the smaller ones in the smaller cities, and again, as my predecessor mentioned, Aarti mentioned, what is the capacity of the local agency as well as the private sector and the advisors to undertake diligence of these small projects across the city? Do we have enough skilled people to undertake that? So that's a challenge which we're seeing in terms of scaling up of the skilling to undertake these kind of assessments. And because data is not available and data is still dispersed and we do not have a large history of data, so it's something which, while we would look at digital technologies and probably AI helping in quite some extent to this, until we have reliable data and established baselines and models, automating these processes on diligence is going to be a challenge, right? So that's one problem that we face. But when you talk about the second part about global capital providers, yes, they do see projects which have a better green coefficient actually responding with directing more funds to it. There is an uptake. But the question
because internationally they're a lot more conscious of this and will only get involved with projects and with people who are also meeting those parameters.
Correct. So the big ones still probably get that attention, But I would also want to take how do we kind of bring attention to the smaller ones. And that's where probably aggregation, so that they can come to a scale and to a platform, is something what would be required to kind of accelerate the pace of adoption in the rest of the country and not just limited to a few large cities or state capitals.
Most important, and you have to be bullish when actually markets are bad. In bullish market, to be bullish is not a big deal.
Should we look at blue chips with the same awe that we used to?
So even if you are the bluest of blue chip, and if the valuations are upwards of 50-60 times, and the companies are glorifyingly growing at 5%, just run.
The argument is being made that because of geopolitical factors, etc., valuable companies in India are available at rates they haven't been for several years.
Yes, yes. That is what you should have independent mind. Market is going this side, left side, you should go right side.
By what logic am I going to sit there and talk to Jaideep at Rebel and believe that the world is going to move to cloud kitchens as a word hadn't even been defined yet? Ajit, Ferlenko, furniture rental. We gave him $6 million. He took $4.5 million of that and bought wood and nails and started making furniture. Most companies we give money to turn around and give the money to Google and Meta and start buying advertising. But the chaos that we live in here on a day-to-day basis enables so much great opportunity.
You've been on both sides of the table, right? Asking for funds and then giving them out as well?
A friend of mine and I had an idea that let's build a digital music business. And this is forget iPhone, pre-iPods, right? So, and you talk about timing and the importance of that. We were so early.
There's no real compulsion for you having to come to India and start a business here.
And if my job at ICICI was find new opportunities for us to leverage what we know to build, so look, why don't we go build everything we own? So in June 2005, again, not knowing anything about anything, I moved to India with a BlackBerry, a laptop, a sample term sheet, sample diligence book, and they said, good luck, call us if you find anything.
Talk to me about Dunzo.
We weren't the right investor for something like quick commerce. I would say Dunzo did an amazing job as being a brand that people loved, really did a great job of creating a brand. They did a bad job of thinking about the economics of the business.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table.
Mr. Priyadarshina, coming back to you, and we're talking about, infrastructure and how we're going to be developing going forward and being more climate conscious and our infrastructure being more, climate conscious, climate intelligent. Now, the question comes about costs, obviously, and, a green development or being sensitive to the environment but developing at the same time, it raises concerns about how, this will be a lot more expensive and how, so how do we reconcile sustainability with cost and competitiveness, especially in a fast-growing economy like ours?
By the time this panel finishes, you guys will be convinced that this person knows probably the least. Because you put 20 people, you put 20 people into a room. बिल्कुल सच कह रहा हूँ. आप 20 लोगों को एक कमरे में डालिए, and you ask them that what is the biggest challenge to ensuring the greening of infrastructure. 19 out of the 20, that's provided I'm in the room, 19 out of the 20 will say it's money. They are not wrong. But very unfortunately, the way it has been projected, it has become a green versus a non-green dialogue. And I think there is a big dichotomy there. It does not need to be framed like this. And I'll give you two examples. One from, my childhood days, but the other from the WTO days. I spent 25 years with the World Trade Organization, and we wanted to modernize the border transit procedures between countries that did not have access to the sea and therefore ports, and their goods for exports had to move through the borders of another country where those goods were not meant to be, used or imported into. The absolute, for years on, the answer that was given to us, we can't do this because modernization of the trade facilitation border measures requires money. ये निरंतर ये बात कही जाती थी. But the point was that once done, it repaid the cost within such a small period. Why? Because you had, and I'm talking about global cost, not necessarily the cost of the country which put in it. Suppose you had a truck which was waiting there for a week before it could get cleared. Suppose you had people there who, simply because the trucks were waiting, you had to have security guards there. Then there were lots of additional expenditures which got so easily cut. So very often, it is true, green infrastructure, the greening of anything definitely will require more upfront costs. But you will get the benefit of it very, very quickly. And if I really want to drive home the point, I know it's not the best example, and apologies, I keep breaking into occasional Hindi, perhaps because for 25 years I couldn't use as much Hindi in Switzerland. There was one thing which, and again I repeat, with apologies, it's not the best example, but I'll still use it. As a growing up child, we were told, Sasta roye bar bar, mehenga roye ek bar. I don't know if you guys have heard of it or not. But literally, trust me, this holds for green infrastructure. You might end up spending more money initially. Not only will your cost will recover quicker, but very importantly, if you now look at it as an economic issue, don't look at it as a sustainability issue. Look at it as an economic issue. And if you look globally where things are going, then certainly the entire concept of value chains will get linked to sustainability. And if you've got sustainable, green and intelligent infrastructure, which is transporting what you're producing to where it is to be exported to, trust me, it will be a huge boon. So yes, it is a cost, but it's a cost we'll bear and a cost that we'll very soon recover.
Right, I think the English saying would be penny wise, pound foolish, perhaps. But
even better.
Ms. Nain, if there's something you'd like to, add to that, and also the role of multilateral bodies in catalyzing green standards adoption, beyond what you're already doing, advocacy, and what sort of technical and financial instruments does UNEP deploy in emerging economies like India?
Completely echo what Shishirji said. It's finance, it's critical as well. I think India's investment needs are huge, and it's a big challenge. But coming to your question, advocacy is just one aspect. The Secretary General about 2 years back laid the roadmap for UNEP on climate action, and that was you look at climate science, support that. protect the vulnerable, especially workers and women, and lastly, enable a switch to clean energy. And that's what we work towards. So we help a lot of subnational and local governments, that is cities and municipalities, in establishing the climate science, which is basically the evidence for further action. That is research. For example, we did recently in the city of Chennai, we spent 1 year in understanding the urban heat patterns of the city. And we work with some of the leading research institutions in India, public and private, but also global institutions. So, establishing the evidence and presenting it to the stakeholders is very critical. Secondly, and not just UNEP, but even other players in this sector, we are looking at helping the government test innovative solutions, whether they are in the test labs or they're ready for commercialization or in early commercialization state. It's very, very important to boost the confidence of the users to be able to use these solutions that we have already. And we spend a lot of time. Very recently, we worked with the government of Maharashtra to ensure that they have some innovative solutions for cooling in housing under Pradhan Mantri Awas Yojana. And it helped them to the extent that they have scaled up and adopted it across all their new upcoming projects. So that is very critical, and that is something that we do a lot. Capacity building, training of all formats, and also financing mechanisms. So we are trying to see how we can converge CSR funding, unlock international climate adaptation funds. For India, that targeting and unlocking adaptation funds, which are available through various multilateral bodies, is very, very critical, especially to set up the models. And also we are trying to work to, unlock business models with the private sector, whether it's on impact investment or is it on, pay as you go, pay for your services models. We are trying all of these. And advocacy then comes once you have set the examples, once you have proven the concept, that is when advocacy comes in.
Right, and if you can tell us more about adaptation, and also when we're talking about these 400 million people who are going to shift to cities and how our cities have to develop, is there any way we can prevent that from happening using, green infrastructure in rural areas, or in making sure that there is no need for them to make that shift to urban India?
So in terms of global climate adaptation funds, there are multiple which are available to countries like India, prominent being GEF, the Global Environment Facility, which helps bring in funds as grants as well, but also as credit lines that can be used by all kinds of actors, from the national government to the subnational government and to cities and so on and so forth. It is just that you have to prove the scalability and replicability of your solution. And that is where I think you would also be aware that cities and all those who are involved face the problem. They're unable to always prove the scalability and replicability of the solution. And no investor wants to invest in something which does not have a long-term future and a good bottom line, whether it is green or blue infrastructure or whatever. So that becomes very, very critical. And in terms of training and other things and advocacy, we build further on that after that.
Well, thank you so much, and lots to think about, I hope, when we talk about green infrastructure and how we want to develop, how we want the country and the cities to develop going forward. Thank you so much all, and a big round of applause, please, for the panelists.
Most important, and you have to be bullish when actually markets are bad. In bullish market, to be bullish is not a big deal.
Should we look at blue chips with the same awe that we used to?
So even if you are the bluest of blue chip, and if the valuations are upwards of 50-60 times, and the companies are glorifyingly growing at 5%, just run.
The argument is being made that because of geopolitical factors, etc., valuable companies in India are available at rates they haven't been for several years.
Yes. That is what you should have independent mind. Market is going this side, left side, you should go right side.
By what logic am I going to sit there and talk to Jaydeep at Rebel and believe that the world is going to move to cloud kitchens as a word hadn't even been defined yet. Ajit, Furlenco, furniture rental. We gave him $6 million. He took $4.5 million of that and bought wood and nails and started making furniture. Most companies we give money to turn around and give the money to Google and Meta and start buying advertising. But the chaos that we live in here on a day-to-day basis enables so much great opportunity.
You've been on both sides of the table, right? Asking for funds and then giving them out as well?
A friend of mine and I had an idea that let's build a digital music business. And this is forget iPhone, pre-iPods, right? So, and you talk about timing and the importance of that. We were so early.
There's no real compulsion for you having to come to India and start a business here.
And if my job at ICICI was find new opportunities for us to leverage what we know to build, so look, why don't we go build everything we own? So in June 2005, again, not knowing anything about anything, I moved to India with a BlackBerry, a laptop, a sample term sheet, a sample diligence book, and they said, good luck, call us if you find anything.
Talk to me about Dunzo.
We weren't the right investor for something like quick commerce. I would say Dunzo did an amazing job as being a brand that people loved, really did a great job of creating a brand. They did a bad job of thinking about the economics of the business.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna.
Hello and welcome to VoiceSpot Presents the Great Business Story Transforming India in association with NDTV Profit. I'm Nupur Talwar Suri. As artificial intelligence reshapes industries worldwide, companies are rethinking how products, infrastructure, and entire ecosystems are designed. Dassault Systèmes is driving this transformation with its 3D universe, combining AI and virtual twin technologies to power the next phase of industrial innovation. And joining us today on our broadcast is Deepak NG. He's the Managing Director of Dassault Systèmes India. Hi Deepak, great to have you here. How does Dassault Systèmes see platforms and digital ecosystems shaping the future of industries, not just in India, but across the world?
So you look at India, the way the growth what we are seeing in India, be the GDP what we are talking, and we going to be soon the third largest economy. So this requires definitely one element is nothing but the technology what we are going to leverage for supporting industries. So this is where Dassault Systèmes not only helping in India but globally helping organizations through our virtual twin experiences, the 3D universes, to ensure that the technology is leveraged in their daily day-to-day activities to build right products and right solutions.
Right, and specifically in India, you've been here for about 4 decades or so. So how has that panned out, and how have you helped industries grow to where they are today?
So over the period of last 40 years, the different generations has evolved in actually positioning this application in an enhanced way for organizations to leverage more and more. Then followed by not only the end object, but can I actually associate with other elements, which is nothing but project management, product data management. That's the reason where Dassault Systèmes coined the PLM, product lifecycle management, followed by multiple levels of improvement. Today we talk about 3D universes and virtual twins.
Now, in the AI era, is AI truly embedded at the platform's core, or is it more of an enhancement in a layered sort of setup?
Dassault Systèmes was involved or is involved and continue to get involved with most of our customers or all the customers in terms of helping them to create their IPs. Now, the applications or the solutions, what we actually do or what we offer them, helping them to innovate further. This is where we have our CATIA is the design application, Simulia is the simulation application, manufacturing execution system and logistics and all happening with the digital manufacturing solutions, and also helping end customers to do that. All these applications actually layered in one single platform, which we call it as 3D experience platform, and this platform embedded with AI, which is integral part of it. Now, this platform is not new. It's been there from last 15 years and all our customers are leveraging it. Now we have embedded our AI companions to ensure that we are helping our customers to do their job more faster and help them to innovate further.
How does the designing solution meet very different needs that each sector has?
We have actually created our industry solutions, what we call. The applications are actually embedded with the knowledge, know-how, the templates of each industry what we serve. So if I have to give you a count, we support 61 different segments. Like it can be energy and materials industry. Within energy and material industry, you have multiple segments. You have high-tech industry. Within high-tech industry, you have multiple segments like semiconductor, data center. Then you have white goods manufacturing company. And as you rightly said, in life sciences, we have personalized patient care, medical devices, and then pharmaceutical companies. And in manufacturing, you have automotive, aerospace, consumer packaged goods, and many more. So all these industries and all these segments, what we do is we have created industry solution experiences. That means we understand what does it take an organization to create their end object. So the end object is nothing but the product what they offer, like what you said, different industries, right? So for those end objects, we actually have curated solutions catering it different level in their value chain. So as we design manufacturing simulation, that means as an organization, if I get these solutions, I can actually use right applications in their designing stage, manufacturing stage, and simulate and see what the product is behaving before it gets manufactured. So that means our solutions are ready with industry specific requirements.
Now we have programs like the Make in India, the Designing India, which the government is very focused on. But how do you see Dassault at the center of all this?
Our applications and softwares were used extensively for design and simulation for many years. Now we started to see the progress in India. The more spend on research is happening, the more innovative ideas, which actually kind of was more of vision is getting converted. And to support all this, Dassault Systèmes virtual twin experience is actually fitting very apt for that. Now you touched upon a very important topic, which is manufacturing. Now for that, we hear a lot, most of the companies are expanding to set up their new plants, increasing their capacities. So this is where our manufacturing solutions are actually taking shape. So we have seen a tremendous progress from last 6 years on the investments, both from the companies on their new manufacturing setups, from us providing the right solution for their manufacturing execution system, logistics, operations, and planning. This is where Dassault Systèmes is actually helping to connect your design, manufacturing, and put together, build a virtual twin for them to leverage the AI when it comes to adopting it.
Now, earlier when we were talking, Deepak, you told us about something that's very interesting, that's AI companions. Now, in simple terms, what does this mean? How are they different from generative AI tools that essentially are dominating the market today?
You take any action, whether it is in engineering or research or even your creation of the data. So today we talk about the agents, helping them to create, right? It can give you the answer, but it will not have the right IP. I mean, whatever IP you have, it will not capture and then process it. So what Dassault Systems has done, we were fortunate with more than 400,000 customers globally leveraging our technology on applications and also a 3D experience platform. We know the knowledge know-how. We know their knowledge know-how. So we have created 3 virtual companions. Virtual companions, the one is called Aura, which takes care in our 3D experience platform, crawls across your IP or your data organization and help you to build dashboards, help you in collaboration to work faster, because it's nothing but an agent which is supporting you to do that activity. Then we have Leo. Leo is engineer. There is an element of research also, right? You have to have continuous innovation. Maybe, for example, if I say I want to build this product or a component with a new material which is more sustainable, because we talk a lot of topics on sustainability, less carbon footprint. So now we have Mary, a virtual assistant, which actually tells you a component looks nice. Now, if I change this material, what will be the implication? It will automatically perform all the actions, whether the component actually has a right strength, the stress analysis, then assembly sequence. It does everything after creating through virtual companion and gives you the result much faster. So it is very well embedded in our applications.
All right, now as AI and twin technologies actually mature, what are the 3 biggest disruptions that you see, and give us a sense over the next decade or so, what will those disruptions look like?
According to me, in our area which I have to talk about, in next decade or so, having everything in the virtual world will be mandatory. For example, because the business also talks about that, there is close to around 12.5 billion market for creating virtual twins alone in next 5 to 6 years. That means in 10 years it's going to be more. So that means the world is going to have the replica of the world in a virtual world for simulating and then making, creating for the better life. This is one thing which I can see in next 10 years, what things may happen. Once you have that, there are endless possibilities. Your simulations will be faster, your smart cities will become more smarter, then you know how to communicate and what kind of new designs you need to put in. It will help to simulate these kind of high level innovation where you never know, you may be flying an aircraft, passenger sitting without a pilot.
Tell us a bit more about your personal story as well, because every leader who leads an organization brings with him certain core values and certain stories that he actually grew up with. So tell us a bit more about yourself.
I'm from Mysore, and then I did my specialization in tool and die making, where it's a practical oriented course, I should say, 6 years, 5.5 years of college in a shop floor. The education journey which helped me to become a little stronger in terms of interacting with customers, and always I had a passion in terms of meeting people, knowing them. I mean, that kind of nature helped me to get a right job, which is nothing but sales. So I joined Dassault Systems in 2011, and in 2020 I took over as a managing director of Dassault Systems. So overall, for me personally, at every stage, I believe in learning something new, and more importantly, everything is fine, but I'm a people person, so I like my colleagues. I like the way with I interact them, the way with where I communicate with them. Because at Dassault Systems India, we are fortunate that we are growing on higher double digit from last 5 years. So this can only happen when you have a right team in place and right growth mindset in place. This can happen when you work as one team and then one group. And I've been fortunate to interact with them like a colleague, and then see where all we can actually add value together to help our customers and help Dassault Systems globally as well.
Deepak, it's been a very insightful conversation. Thank you very much for joining us on NDTV.
Thank you, Nupur. It was a pleasure.
Most important, and you have to be bullish when actually markets are bad. In bullish market, to be bullish is not a big deal.
Should we look at blue chips with the same awe that we used to?
So even if you are the bluest of blue chip, and if the valuations are upwards of 50-60 times, and the companies are glorifyingly growing at 5%, just run.
The argument is being made that because of geopolitical factors, etc., valuable companies in India are available at rates they haven't been for several years.
Yes. That is what you should have independent mind. Market is going this side, left side, you should go right side.
By what logic am I going to sit there and talk to Jaydeep at Rebel and believe that the world is going to move to cloud kitchens as a word hadn't even been defined yet? Ajit, Furlenco, furniture rental. We gave him $6 million. He took $4.5 million of that and bought wood and nails and started making furniture. Most companies we give money to turn around and give the money to Google and Meta and start buying advertising. But the chaos that we live in here on a day-to-day basis enables so much great opportunity.
You've been on both sides of the table, right? Asking for funds and then giving them out as well?
A friend of mine and I had an idea that let's build a digital music business. And this is forget iPhone, pre-iPods, right? So, and you talk about timing and the importance of that. We were so early.
There's no real compulsion for you having to come to India and start a business here.
And if my job at ICICI was find new opportunities for us to leverage what we know to build, so look, why don't we go build everything we own? So in June 2005, again, not knowing anything about anything, I moved to India with a BlackBerry, a laptop, a sample term sheet, a sample diligence book, and they said, good luck, call us if you find anything.
Talk to me about Dunzo.
We weren't the right investor for something like quick commerce. I would say Dunzo did an amazing job as being a brand that people loved, really did a great job of creating a brand. They did a bad job of thinking about the economics of the business.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches.
Hello and welcome to Voice What presents the great business story transforming India in association with NDTV Profit. From a bold vision in 1986 to a global presence today, Balaji Railroad Systems Private Limited has helped shape the future of rail infrastructure. What began as a railway consultancy in India has grown into a trusted engineering partner delivering complex railway, metro and transportation projects across the world. Today I have with me three formidable gentlemen. First up, we have Sunil Srivastav, MD. Thank you so much for joining us today.
Thank you, Sanjay.
Then Manoranjan Prasad, Director Corporate Affairs. Thank you so much for joining us.
Thank you.
And finally, V. Ramakrishnan, Director Strategy. So, Barcel started in 1986, and what was the dream behind starting this company? And for someone who doesn't know, what would you say Barcel actually does in a railway or a metro project?
The founders of Barcel had spent all their professional life working for the railways. So post-retirement, they only thought it fit to contribute back to the industry by providing professional advisory services to mainly users of the railway system, which could be the infrastructure organizations like ports, mining companies and power plants, and that's how the whole Barcel came into being. So that was the founder's vision. We are on the project, railway project, we are right from the planning stage to the entire life cycle of the project or the railway system we are associated. So our work starts normally in the planning stage in terms of conceptualizing a particular railway system, assisting in feasibility options, looking at technology options. Then we get into the actual engineering part of it. If it's kind of feasible, then we do the engineering. We help the client in procurement. We help them in identifying contractors. And then we take up the supervision part of it till the train starts running. So the next part is much more important because you also need to make it sure that it's running safely, it's running efficiently, and it's a sustainable system. So that is where planning for the operation and maintenance is where we come in. So our job is literally not over till the railway system is surviving. So that's what we do.
V. Ramakrishnan sir, you've completed over 1,000 projects, right? And what would you say are your top 3 or 4 standout ones that make you really proud?
Probably, all of you would remember the latest one, which Prime Minister Modi inaugurated last year. That is Pamban Railway Vertical Lift Bridge. And we were the project management consultants for this.
Wow.
About 72 meters in length. It lifts up 22 meters so that the large ships can pass through. It's on the sea. That makes it even more rather difficult. I move on to the next one, which I think every one of you would have heard about in the last few years. Yeah, Vande Bharat. And probably which you may not know is Vande Bharat has a manufacturing facility which was set up in Latur, Maharashtra with a Russian collaboration. Barcel was the sole project consultant for this.
Let me deep dive or dive straight into the key aspects of the full year financial FY26 performance. We had estimated a system credit growth to be around 10.5 to 11.5%. We did 12%, up from 5.4% last year. As you can see, there is a positive momentum as we had expected. Deposit growth at 14.4% continues to grow faster than credit, which is what we have always been doing. The growth rate is better than the system growth rate yet again. Net income growth clocked at 11%, EPS growth of 10% versus 3% last year. The ROA continued to be stable at 1.9% due to efficiencies from declining cost-to-income ratios and a focus on quality growth reflecting in lower credit costs. We would like to remind the sizable investments we have made over the last 5 to 6 years, which will bear fruit in the coming years. These investments were despite witnessing significant events like COVID, a complex and one of the largest mergers in corporate history. Distribution nearly doubled to 9,700 branches. The number of customers nearly doubled to over 100 million customers. Our tech investments more than quadrupled to around $1 billion. The merger with mortgage company HDFC Limited is an investment for the future. The bank navigated the same in a stable manner and over the last 3 years, despite changing economic outlook and regulatory stance. The above is going to provide operating leverage in future. Sometimes all of us have short memories and forget the core business foundation, which remains our moat and strength. Customers at 100 million, and we continue to acquire about 6 to 8 million customers per annum. This will be the funnel for future growth. Almost about 42% of our customers are less than 40 years of age, thus enabling us an opportunity to engage through their life cycle, which would be the future engine of growth. We continue to be market leaders in our core franchise offerings, our modes such as cash management, especially in the capital market segment where 35 to 40% of our account settlement is with us. Almost 40 to 50% of the bankers to issue escrow settlements are with us. Almost 18 to 20% of exports go through the bank. About 13 to 15% of the country's imports go through the bank. 35 to 36% of credit cards are acquired on our terminals. We have almost about 22% of the credit card issuances of the market with us. Almost about 26 to 28% of credit card spends in the market are with us. We have dominant salary relationships in most of the private sector corporations. We are amongst the top 2 MSME banks in the country, amongst the top 2 mortgage banks in the country. We are the top wheels bank, which is auto and transportation business in the country. The above, despite intense competitive environment for a long period of time, reflects the excellence and execution capability of the bank. Let me just recount some of the strengths of our financial parameters. We have a strong capital position at about 19.7%. Our asset quality has been healthy for a long period of time, over 3 decades of business cycles. Currently, our gross NPA is just about 1.15%. The bank has been creating large provisioning buffers, enough to absorb any shocks or future shocks that may arise at any point in time due to any certain unscheduled events. We have almost about 125 basis points of our total book, which are these provisioning buffers. The loan deposit ratio is not a constraint at all. The regulator has come out and talked about it. We have demonstrated our ability to gain market share on deposits every year. In fact, for the last 5 years, we've gained about 30 to 50 basis points over the last 5 years. Hence, funding is no more a binding constraint. In fact, we have been building granular and sustainable deposit franchise, which is reflected thus. If you were to define granular as less than 3 crore time deposits, we have moved from a 31% of the net incremental inflows of total deposits in FY25 to a 47% of net inflows in FY26. That shows how we are focusing on granular and sustainable build-up of deposit franchise. Of course, having said that, the bank will continue to improve its quality of deposit franchise, and especially on the current and savings accounts as well in future. In fact, all of you know that we witnessed a very unprecedented event in March recently, but its strength and resilience was seen with stable and strong deposit flows. Of course, it has also helped us by the kind of unequivocal statements that the Government of India, the Reserve Bank of India, and SEBI came out with it, and we are grateful and thankful to them. But our most important strength, which is something that we'll be harnessing in future, is going to be our leadership in the technology space. We have been focusing on building each of the 3 layers, the 3 or 4 layers. The first one being the modern front end. A large share of our investments have gone through improving the digital front end experience. We've been focusing on upgrading our acquisition and service journeys. The objective being to have a very seamless experience to our customers. In fact, we have launched our new mobile and net banking platforms in the financial year. We have 60 million registered customers on our new net mobile banking. But what we are very excited about is in this age of digital frauds, I think we provide one of the most safe and secure mobile platform in the country. It is OTP-less authentication. We have a smart lock, which is enhanced security, where you can lock your funds and investments. And we have a kind of a full-stack UPI-enabled wallet. A combination of that will make your funds minimize the kind of digital frauds that may happen in future. The efforts have increased digital adoption to 97% for payments and service transactions and 92% for acquisition of journeys. The next layer we've built is the intelligence layer. This is going to be an extremely important one because this is the layer which will make our AI ready first. We have decoupled our front end and back end through this modern API gateway and orchestration layer. And like that, we have a strong foundation for the emerging agent-driven AI model as well. The fourth one is the backbone, the data backbone. AI is only as strong as its data. So we have built a robust data foundation anchored by one single source of truth, which is the enterprise customer information file. This is a kind of an innovation and transformation that the bank has built, and it will start to provide a huge amount of benefits in future. We went live with our lakehouse architecture recently, and this will be visible, while not always visible externally. This work is essentially to our long-term scalability and AI aspirations. But what I'm extremely excited about is the big story, which is where we have built a unified AI platform in-house. This AI native platform that spans the entire organization allows us to deploy AI agents quickly without building custom interfaces between systems. It supports multiple foundation and open models and includes a unified evaluation model for strong governance, compliance, and security. The rapid deployment of AI agents at scale will place us among the small group of Indian and global banks with such advanced in-house capabilities. We already have 5 use cases in production and 14 more in development. The above leadership position will enable us to harness efficiencies across the organization and will be a key driver to enhance return on asset over the next 1, 2, 3 years. Our guiding principle is return on assets, loan growth and deposit growth, and quality of the balance sheet from a risk perspective. All of it should culminate in a consistent earnings per share growth, which is going to be the anchor for all of us to look out for. I know a lot of you have been, keen to know some of the other matters that that arose during the month. So let me also take on the subject matter relating to the resignation of former part-time chairman and the Dubai branch-related matter. As all of you are aware, I and the members of the board did provide statements post the 18 March 2026 event. The government of India, the Reserve Bank of India, and the SEBI came out with statements in favor of the bank. The legal review is in process. As and when this happens, we shall provide a summary of the same. The audited financial statements of the bank for the year ended March 26, which was just released today, carry notes which are self-explanatory. On the Dubai branch-related matter, the same has been covered in the notes to accounts as well. There is an event which has happened post the 18th of March. On 23rd of March 2026, the NCDRC order was also released. That the order highlights that the complainants were not retail or not uninformed investors, and they had a clear intent to pursue high-yield, high-risk investment products. So I do not know whether we would have any further update that can be provided about two subject matters. So I think I have covered most of what I had to say. I would now request the question and answers from all of you all. Thank you so much.
Thank you very much.
Nirav, please open up for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Please note, participants are requested to restrict to 2 questions per participant and kindly join the queue for a follow-up. The first question is from the line of Piyush Shukla from NDTV Profit. Please go ahead.
Good evening, Mr. Jagdishan. Thank you for attending the call. I have two specific queries with regard to, you mentioned how the legal review of the resignation by former MD is pending, but what markets were also eyeing was whether the bank's board will go ahead and apply with the Reserve Bank of India for a reappointment of your tenure, which I believe ends in later towards this calendar year. Can you provide us some clarity, Mr. Jagdishan, whether you are keen on continuing with the bank and what is the board's view on this particular matter? And I also wanted to understand that you have posted above industry average deposit growth in the FY26. Till now, your guidance was that next year you will outpace banking industry in terms of loan growth and deposit growth. You will post higher than industry standard. What can we expect now? Upwards of 12-13% sort of a credit growth and 14% the stable sort of a loan growth and deposit growth in FY27. And any color on margins, sir, if you could help us understand when will you reach that 4% figure. So it has been static, it has been stable at around 3.4% between the last quarter and this quarter.
A lot of questions are being asked, but I will let my colleague, because it's pertaining to me, let my colleague Kaizad sort of respond to one of the questions or many more.
Let me respond to your first question, and then I'll request Srini to respond to the balance. As regards to your question with regard to the reappointment of Shashi Jagdishan, the NRC and the board is completely seized of the matter, and this will be taken up in due course as the necessary process would require. So let me assure you that this is a matter which is engaging the NRC and the board.
Let me take the others, and maybe I'll have my colleagues supplement it wherever needed. You spoke about the growth expectations. If you just notice, we had given a kind of a glide path in the past, and if you look at it, we have grown our advances to about 12%, up from 5.4%. So I reiterate, the positive momentum is on. Now, obviously, you are all looking out or fishing for a number with obviously with a lot of uncertainties in the horizon, especially on what's happening in West Asia. I would rather prefer to say that we would, I think the trajectory is in the right path in terms of positive momentum, and we shall calibrate that as we get more clarity from the macro indicators over a period of time. As regards the deposit growth, I think we have adequately demonstrated for quite some time that our deposit franchise is very solid and resilient. We have always ensured that the deposit growth is much higher than the loan growth. I think that sort of speaks about our thought process. Three is the quality. Obviously, you can define quality in two ways. One is in terms of how is your retail composition or granular and sustainable composition, which is where we have always maintained around 82 to 85% of our deposits in retail. And that continues to be the kind of proportion that we have been witnessing for a very, very long time. And within that, if you notice, the system has been focusing more and more on sustainable deposits. And one of the indicators that we see is the, if the less than 3 crore time deposit ticket size, which is supposed to be very granular from our perspective, that proportion has grown from 31% of the total inflows, net inflows that happen in FY25 to about 47% in FY26. So the other aspect, which I'm sure all of us is on the low-cost current and savings. I think we have done reasonably well in terms of growth this year as compared to last year, but we don't have visibility of our incremental deposit market share on the current and savings because we do not have industry numbers thus as of now. It'll take, there will be a bit of a lag before we get the industry numbers, but our endeavor is to focus more of that over the next 1, 2, 3 years, and you will start to see that progressively moving up. So, so we do have strategies around that, and that should sort of, enhance and enrich our franchise, deposit franchise even further. Margins, Srini, you want to comment on the margins part of it in terms of trajectory, if any?
So one is that the policy rate transmission on the asset side is largely there, and both the magnitude of the change comes in a relative short period of time. Similarly, the policy rate transmission on the funding cost, which is the deposits and other effects, there's a lag effect on that, and it is dependent upon various market dynamics, available liquidity in the market, customer choices, external effects influences, and so on. So while the NIM trajectory can be range bound up or down in a shorter time period, but over a longer time period, we expect it to be stable, to be moving because of opportunity space and the cost of funds that we have. However, as we focus on margins, it is about the returns. That is what wherever there is a margin resiliency or up and down that happens, we have that space both from a cost and credit point of view to focus on the returns, and that is how our pricing models work to get optimized returns, not necessarily optimized line items, everything, all of those line items. So at the end, it is about the returns, and that is the focus at which we have.
To add to what Srini is saying, if you look at the financial year FY26, on a full year basis, the margins have actually dropped. And that is something that he's already explained because of the faster transmission downwards on the asset yields, and the deposit rates have actually lagged that transmission. But yet our return on asset continued to be stable in a 1.9% range, and that is what he's trying to say, because we have juiced our efficiencies both from an operating cost level and also from the quality growth in assets, which has led to a lower credit cost as well. Yeah.
Thank you.
Thank you. Thank you. Next question is from the line of Ekta Suri from Z Business. Please go ahead.
Am I audible? Hello?
Yes, please.
सर मेरा सवाल आपसे, आपने अभी दुबई के मिस सेलिंग केस के बारे में बात की, लेकिन साथ ही साथ जैसे ही आपके दुबई के मिस सेलिंग 81 बॉन्ड्स की खबरें आई, इसके साथ साथ आपके जो इंडियन में बैंक की जो ब्रांचेस हैं वहाँ पर भी इंश्योरेंस को लेकर मिस सेलिंग हो गई या कस्टमर सर्विस को लेकर मिस सेलिंग हो गई, उसकी खबरें भी बढ़ गई। तो सर आप ब्रांच लेवल पर किस तरह से अपनी कस्टमर सर्विस और मिस सेलिंग को रोकने के लिए क्या प्लान है? एंड आई ट्रांसलेट माय क्वेश्चन इन इंग्लिश आल्सो। आई एम सेइंग दैट
थैंक यू थैंक यू Ekta. Please go ahead. Please translate.
Yes. So I'm asking that, as soon as the news about your 81 bonds mis-selling in Dubai happened, there were like constantly, we see news and we see cases posted on LinkedIn and social media also, where banks are like, at your branch level also there has been mis-selling to an extent that, customers are being told that if you want a loan, you have to buy an insurance. And when, told that this is not an RBI rule, they're saying that, okay, then go to RBI and get the loan only. So basically, not just at Dubai level, at Indian branch level also in India, there are cases of mis-selling, bad customer service. So what is the bank doing to improve that?
No, Ekta, thank you for asking this question. I think, there is a certain wrong perception about the way we sell our third-party products. I think we are probably one of the pioneers in the kind of guardrails that we have introduced in the sale of such products way back as 2015 and 16. And if you see some of the processes that we have laid out, it includes a pre-verification, including a geotagging checks and the confirmation on the video, whether the customer has understood the product, etc., so that it's not a coercion or coerced sale. So that's part one. Part two is we do have product guardrails in terms of which are the segments that we will not sell to. We have a clear definition of the exclusions that we have, where we don't sell to marginal segments or we don't sell to the senior citizens beyond a certain age. Like this, our processes are rather robust, and these are. I think at some point in time we shall publish some of these in the public domain. But you can probably check it out from the CP grams or the public website on the insurance sale, of which we are probably one of the lowest, and I think maybe a subset of that is what will be pertaining to HDFC Bank, and even more from a missile perspective, I think we are one of the lowest. But I can assure you that at some point in time, considering the fact that you raise these kind of questions, we shall be publishing it in the public domain. It's very important to correct this perception. And of course, we are not perfect because there are about 215,000 people across 9,689 branches in the country, in 4,000 towns. Sometimes there will be some amount of exuberance from these people, but we do address them rather swiftly and very sternly if at all there is any event of missell. But frankly, if you look at the last 10, 11 years of data, the actual data shows a completely different picture, which is where we don't see any kind of a malaise in our intent or even in terms of the actual execution of that particular processes. So let me stop out there. I think some of these are anecdotal references which come on. I think one of the learnings that I take away from this is to probably get into some of the questions on these or the references on these social media in a far more intense way. Thank you.
Thank you.
May I ask my second question?
Sure, ma'am. Go ahead.
Sure.
Your reappointment will be taken up.
Ma'am, sorry, we were not able to hear you. Can I request you to repeat, please?
Am I audible? Hello?
Yes, ma'am.
Sir, I know you just mentioned that your reappointment will be taken up and there'll be a due course. So is there any meeting that we can keep a track of regarding the news? When will it be discussed? Which board meets when by NRC?
No, I think there is a timeline within which we are to have this process completed. And as we move forward, there are certain disclosures that we would be required to make. And when we make those disclosures, it will be available to all of you.
Thank you very much. I'll request to come back for a follow-up question. Next question is from the line of Ritu Singh from CNBC. Please go ahead.
Mr. Jagdishan, it's a welcome change to have you address the media. I think it's the first time since you've taken charge as the CEO that you're addressing us on earnings call. If I may start by asking about that, what drove that change? And secondly, since you spoke about the Dubai matter in some detail, you referred to the court ruling, which from our understanding purely deals with the subject of jurisdiction. That's where it was limited to. But besides that, in terms of the action taken by the bank, we understand about 16 employees, past and present, were taken action on in some form or the other. Do we, would you now be able to say that the matter is closed, that the action that the bank had to take has been completed? And any timeline you could give us on the legal review as far as the former chairman exit is concerned? Any update on that front? So that was the first question on, some of these commentary if you could give us, and then I come to the numbers.
So on the first question, obviously, our philosophy has been that we always listen to our customers and stakeholders. So I have listened to you all, and it was, and that's one of the reasons why I'm doing this. So thank you for that. But it does not mean that I will get onto this so-called interaction on an ongoing basis. I thought this is a full year FY26 event, which is a full year event, and it is appropriate for me to come here at this juncture. And probably, of course, it had also some certain events which had happened in the recent past, so it was important for me to provide that kind of visibility as well. On the second aspect of it is on the NCDRC matter. You're right. One of the first things that they talk about is jurisdiction, that India is not the jurisdiction for that complaint, and it has to move to the overseas jurisdiction where the event had happened. But having said that, they go on to, spell out there, because they have the entire history of the case, of the complaint, and therefore it was very interesting for us to see, I think if I'm not mistaken, between clause 46 and 66 of the order. And if you really look at it, it's sort of, I had just summarized it to say that which highlights, which is what I said in my opening remark, that the complainants were not retail or uninformed investors, and they had clear intent to pursue high-yield, high-risk investment products. And of course, it goes on to say a lot more things, but I've just summarized into a small statement. So maybe you may want to look at that aspect as well. The third question is, which is the one that you...
That is, on the chairman's exit, when the legal review would be completed, and that Mr. Mistri's appointment is only for a 3-month term. How soon will we be hearing of the bank's decision?
I'm sorry to interrupt, your audio is not clear.
Has already been deliberated upon?
No, even on the legal review, as I had mentioned, this is in progress. Obviously, the volume of data that the council have to go through is rather voluminous, and that's why probably it's taking time. But as and when it sort of comes out, I think the bank will come into the open to provide a summary of the same. Frankly, I don't have visibility of when that's going to get over, but I wouldn't say it's going to take too long. At the same time, I'm not sort of expecting too short a period as well. As regards the chairman appointment, is that, of course, as I mentioned in the previous, calls, both Kaizad and I were there. We are all rooting for Mr. Mistry for the post, but of course, we do believe that there are certain processes that we need to conclude or before we can even put forth for the deliberations in the NRC and at the board, and before we can provide recommendations to the regulator. I think that process, we do have sufficient time for that, but it's in progress, and the board, as Kaizad was mentioning, like in my matter, they're seized of this matter, and this will be taken up in due course.
Thank you very much. Rita, I'll request you to come back for a follow-up question. Request to all the participants, kindly limit yourself to 2 questions per participant. Next question is from the line of Siddhi Naik from Bloomberg. Please go ahead.
Hi, sir. Am I audible?
Yes, ma'am.
Yes, please. You are.
Hi. I just wanted a clarification regarding your previous statement. You said that the board and NRC both would root for Mr. KK Mistry to continue as chairman beyond the 3-month period that's been granted. Am I correct in assuming that?
No, it's let me sort of clarify that. I think the 2 whole-time directors, which is Kaizad and I, are rooting for it. But obviously, the board will take its own decision. The committee and the board will take its rather collective decision, taking into account all matters of fact that are available from a regulatory perspective, and then basis that, I think they will recommend the right name to the regulator as well. It could be Mr. Mistry, it could be anyone else.
Okay. My second question relates to the forex impact on your treasury book because of the RBI measures. What is the kind of impact that you all have seen on your book, especially from the treasury income side, from the entire forex regulatory order that the RBI put out recently?
So, this number is not in the public domain, but there has been an impact. There's been a part impact in the up to March, and there will be a small impact up to the 7th of April as well. But that's not anything too significant for us to put it up as a separate disclosure. It's already subsumed in the financials. And it's sort of reflected in a part of it is reflected in a slightly tepid revenue growth in the forex income for the full year.
Thank you. Next question is from Saloni Shukla from the Economic Times. Please go ahead.
Yeah, good evening, sirs. So just wanted to get some sense on the advances growth. So, while you've said that you will grow in line with the industry this year and then from next year upwards from there, the retail growth versus, business banking and corporate has been rather tepid. So could you give some color on that? That would be my first question. And my second question, sir, is that last month you had indicated one during, the analyst call and, through a media interview with us, that you want Mr. Bharucha to take a much wider role and you will also be doing some reshuffling of the top management. If you give some sense on where that has progressed. Thank you so much.
So I'll request Kaizad to talk about the asset part of it because he handles that.
So let me first deal with that. I think, if you really look at the growth numbers that we have put out in the pack that has been sent, you will see that we have, accelerated from where we were last year in terms of our retail asset growth. Specifically, we have seen a good traction across our retail assets in the last 3 quarters, starting from quarter ended September to December to the recently completed quarter in March. We continue to have one of the highest disbursements that we have done in the mortgage business. We continue to be amongst the leaders in the auto loan business, and we are very much in line with our disbursements in the unsecured business between PL and BL. If you also see our business banking, which comes, in the MSME space and is part of the mid-market consumer bank, we have grown our book by 20%. And in the MSME space today, we are number 1 in the country in 15 states and amongst the top 2 in 25 states. So that tells you the kind of positive momentum and traction that we have seen come back in the retail book across the wheels business, across the mortgages business, as well as on the personal and business loan side. We've also seen fair amount of growth in the commercial vehicle segment. However, the value growth has been a little tempered because of the GST cut that was seen in the overall wheels business. So from a disbursement and a unit point of view, we have seen good traction, and we are positive about how we are placed in each of these businesses and how we also continue to see it moving forward.
And as regards some of the reorganization, of course, I've done about a couple of times during the last 5.5 years. I look out for this. I believe that such changes, restructuring, reorganization at the leadership level provides cross-pollination of knowledge and practices. And it helps in energizing the organization and bolstering leadership depth, because that's one of our strengths. We have levels of depth which probably some of you may not have witnessed or may not be visible to you all, but the two of us have a strong visibility of that. As regards Mr. Barucha taking on higher roles, I'm sure he's here. You can convince him as well. But having said that, I guess in due course we should be looking at some amount of reorganization. Thank you.
Okay, thank you.
Most important, and you have to be bullish when actually markets are bad. In bullish market, to be bullish is not a big deal.
Should we look at blue chips with the same awe that we used to?
So even if you are the bluest of blue chip, and if the valuations are upwards of 50-60 times, and the companies are glorifyingly growing at 5%, just run.
The argument is being made that because of geopolitical factors, etc., valuable companies in India are available at rates they haven't been for several years.
Yes. That is what you should have independent mind. Market is going this side, left side, you should go right side.
By what logic am I going to sit there and talk to Jaydeep at Rebel and believe that the world is going to move to cloud kitchens as a word hadn't even been defined yet? Ajit, Verlenko, furniture rental. We gave him $6 million. He took $4.5 million of that and bought wood and nails and started making furniture. Most companies we give money to turn around and give the money to Google and Meta and start buying advertising. But the chaos that we live in here on a day-to-day basis enables so much great opportunity.
You've been on both sides of the table, right? Asking for funds and then giving them out as well?
A friend of mine and I had an idea that let's build a digital music business. And this is forget iPhone, pre-iPods, right? So, and you talk about timing and the importance of that. We were so early.
There's no real compulsion for you having to come to India and start a business here.
And if my job at ICICI was find new opportunities for us to leverage what we know to build, so look, why don't we go build everything we own? So in June 2005, again, not knowing anything about anything, I moved to India with a BlackBerry, a laptop, a sample turn.
Hello and welcome to VoiceWhat presents the great business story transforming India in association with NDTV Profit. I'm Nupur Talwar Suri. As artificial intelligence reshapes industries worldwide, companies are rethinking how products, infrastructure, and entire ecosystems are designed. Dassault Systèmes is driving this transformation with its 3D universe, combining AI and virtual twin technologies to power the next phase of industrial innovation. And joining us today on our broadcast is Deepak NG. He's the Managing Director of Dassault Systèmes India. Hi Deepak, great to have you here. How does Dassault Systems see platforms and digital ecosystems shaping the future of industries, not just in India, but across the world?
So you look at India, the way the growth, what we are seeing in India, be the GDP, what we are talking, and we being going to be soon the third largest economy. So this requires definitely one element is nothing but the technology, what we are going to leverage for supporting industries. So this is where Dassault Systems not only helping in India, but globally helping organizations through our virtual twin experiences, the 3D universes, to ensure that the technology is leveraged in their daily day-to-day activities to build right products and right solutions.
Right, and specifically in India, you've been here for about 4 decades or so. So how has that panned out, and how have you helped industries grow to where they are today?
So over the period of last 40 years, the different generations has evolved in actually positioning this application in an enhanced way for organizations to leverage more and more. Then followed by not only the end object, but can I actually associate with other elements, which is nothing but project management, product data management. That's the reason where Dassault Systems coined the PLM, product lifecycle management, followed by multiple levels of improvement. Today we talk about 3D universes and virtual twins.
Now, in the AI era, is AI truly embedded at the platform's core, or is it more of an enhancement in a layered sort of setup?
Dassault Systems was involved or is involved and continue to get involved with most of our customers or all the customers in terms of helping them to create their IPs. Now, the applications or the solutions, what we actually do or what we offer them, helping them to innovate further. This is where we have our CATIA is the design application, Simulia is the simulation application, manufacturing execution system and logistics and all happening with the digital manufacturing solutions, and also helping end customers to do that. All these applications actually layered in one single platform, which we call it as 3D experience platform, and this platform embedded with AI, which is integral part of it. Now, this platform is not new. It's been there from last 15 years and all our customers are leveraging it. Now we have embedded our AI companions to ensure that we are helping our customers to do their job more faster and help them to innovate further.
How does the designing solution meet very different needs that each sector has?
We have actually created our industry solutions, what we call. The applications are actually embedded with the knowledge, know-how, the templates of each industry what we serve. So if I have to give you a count, we support 61 different segments. Like it can be energy and materials industry. Within energy and material industry, you have multiple segments. You have high-tech industry. Within high-tech industry, you have multiple segments like semiconductor, data center. Then you have white goods manufacturing company. And as you rightly said, in life sciences, you have personalized patient care, medical devices, and then pharmaceutical companies. And in manufacturing, you have automotive, aerospace, consumer packaged goods, and many more. So all these industries and all these segments, what we do is we have created industry solution experiences. That means we understand what does it take an organization to create their end object. So the end object is nothing but the product they offer, like what you said, different industries, right? So for those end objects, we actually have curated solutions catering it different level in their value chain. So as we design manufacturing simulation, that means as an organization, if I get these solutions, I can actually use right applications in their designing stage, manufacturing stage, and simulate and see what the product is behaving before it gets manufactured. So that means our solutions are ready with industry specific requirements.
Now we have programs like the Make in India, the Designing India, which the government is very focused on. But how do you see Dassault at the center of all this?
Our applications and softwares were used extensively for design and simulation for many years. Now we started to see the progress in India. The more spend on research is happening, the more innovative ideas, which actually kind of was more of vision is getting converted. And to support all this, Dassault Systems virtual twin experience is actually fitting very apt for that. Now you touched upon a very important topic, which is manufacturing. Now for that, we hear a lot, like most of the companies are expanding to set up their new plants, increasing their capacities. So this is where our manufacturing solutions are actually taking shape. So we have seen a tremendous progress from last 6 years on the investments, both from the companies on their new manufacturing setups, from us providing the right solution for their manufacturing execution system, logistics, operations and planning. This is where Dassault Systems is actually helping to connect your design, manufacturing and put together, build a virtual twin for them to leverage the AI when it comes to adopting it.
Now, earlier when we were talking, Deepak, you told us about something that's very interesting, that's AI companions. Now, in simple terms, what does this mean? How are they different from generative AI tools that essentially are dominating the market today?
You take any action, whether it is in engineering or research or even your creation of the data. So today we talk about the agents helping them to create, right? It can give you the answer, but it will not have the right IP. I mean, whatever IP you have, it will not capture and then process it. So what Dassault Systems has done, we were fortunate with more than 400,000 customers globally leveraging our technology on applications and also a 3D experience platform. We know the knowledge know-how. We know their knowledge know-how. So we have created 3 virtual companions. Virtual companions, the one is called Aura, which takes care in our 3D experience platform, crawls across your IP or your data organization and help you to build dashboards, help you in collaboration to work faster, because it's nothing but an agent which is supporting you to do that activity. Then we have Leo. Leo is engineer. There is a element of research also, right? You have to have continuous innovation. Maybe, for example, if I say I want to build this product or a component with a new material which is more sustainable, because we talk a lot of topics on sustainability, less carbon footprint. So now we have Mary, a virtual assistant, which actually tells you a component looks nice. Now, if I change this material, what will be the implication? It will automatically perform all the actions, whether the component actually has a right strength, the stress analysis, then assembly sequence. It does everything after creating through virtual companion and gives you the result much faster. So it is very well embedded in our applications.
All right, now as AI and twin technologies actually mature, what are the 3 biggest disruptions that you see, and give us a sense over the next decade or so, what will those disruptions look like?
According to me, in our area which I have to talk about, in next decade or so, having everything in the virtual world will be mandatory. For example, because the business also talks about that, there is close to around 12.5 billion market for creating virtual twins alone in next 5 to 6 years. That means in 10 years it's going to be more. So that means the world is going to have the replica of the world in a virtual world for simulating and then making, creating for the better life. This is one thing which I can see in next 10 years, what things may happen. Once you have that, there are endless possibilities. Your simulations will be faster, your smart cities will become more smarter, then you know how to communicate and what kind of new designs you need to put in. It will help to simulate these kind of high level innovation where you never know, we may be flying an aircraft, passenger sitting without a pilot.
Tell us a bit more about your personal story as well, because every leader who leads an organization brings with him certain core values and certain stories that he actually grew up with. So tell us a bit more about yourself.
I'm from Mysore, and then I did my specialization in tool and die making, where it's a practical oriented course, I should say, 6 years, 5.5 years of college in a shop floor. The education journey which helped me to become a little stronger in terms of interacting with customers, and always I had a passion in terms of meeting people, knowing them. I mean, that kind of nature helped me to get a right job, which is nothing but sales. So I joined Dassault Systems in 2011, and in 2020 I took over as a managing director of Dassault Systems. So overall, for me personally, at every stage, I believe in learning something new, and more importantly, everything is fine, but I am a people person, so I like my colleagues, I like the way with I interact them, the way with where I communicate with them. Because at Dassault Systèmes India, we are fortunate that we are growing on higher double digit from last 5 years. So this can only happen when you have a right team in place and right growth mindset in place. This can happen when you work as one team and then one group. And I've been fortunate to interact with them like a colleague and then see where all we can actually add value together to help our customers and help Dassault Systèmes globally as well.
Deepak, it's been a very insightful conversation. Thank you very much for joining us on NDTV.
Thank you, Nupur. It was a pleasure.
Most important, and you have to be bullish when actually markets are bad. In bullish market, to be bullish is not a big deal.
Should we look at blue chips with the same awe that we used to?
So even if you are the bluest of blue chip, and if the valuations are upwards of 50-60 times, and the companies are glorifyingly growing at 5%, just run.
The argument is being made that because of geopolitical factors, etc., valuable companies in India are available at rates they haven't been for several years.
Yes. That is what you should have independent mind. Market is going this side, left side, you should go right side.
By what logic am I going to sit there and talk to Jaideep at Rebel and believe that the world is going to move to cloud kitchens as a word hadn't even been defined yet? Ajit, Furlenco, furniture rental. We gave him $6 million. He took $4.5 million of that and bought wood and nails and started making furniture. Most companies we give money to turn around and give the money to Google and Meta and start buying advertising. But the chaos that we live in here on a day-to-day basis enables so much great opportunity.
You've been on both sides of the table, right? Asking for funds and then giving them out as well?
A friend of mine and I had an idea that let's build a digital music business. And this is forget iPhone, pre-iPods, right? So, and you talk about timing and the importance of that. We were so early.
There's no real compulsion for you having to come to India and start a business here.
And if my job at ICICI was find new opportunities for us to leverage what we know to build, so look, why don't we go build everything we own? So in June 2005, again, not knowing anything about anything, I moved to India with a BlackBerry, a laptop, a sample term sheet, a sample diligence book, and they said, good luck, call us if you find anything.
Talk to me about Dunzo.
We weren't the right investor for something like quick commerce. I would say Dunzo did an amazing job as being a brand that people loved, really did a great job of creating a brand. They did a bad job of thinking about the economics of the business.
Hi, I'm Tamanna Inamdar.
Hello and welcome to Voice What presents the great business story transforming India in association with NDTV Profit. From a bold vision in 1986 to a global presence today, Balaji Railroad Systems Private Limited has helped shape the future of rail infrastructure. What began as a railway consultancy in India has grown into a trusted engineering partner delivering complex railway, metro and transportation projects across the world. Today, I have with me three formidable gentlemen. First up, we have Sunil Srivastav, MD. Thank you so much for joining us today.
Thank you, Sanjay.
Then Manoranjan Prasad, Director Corporate Affairs. Thank you so much for joining us.
Thank you.
And finally, V. Ramakrishnan, Director Strategy. So, Barcel started in 1986, and what was the dream behind starting this company? And for someone who doesn't know, what would you say Barcel actually does in a railway or a metro project?
The founders of Barcel had spent all their professional life working for the railways. So post-retirement, they only thought it fit to contribute back to the industry by providing professional advisory services to mainly users of the railway system, which could be the infrastructure organizations like ports, mining companies and power plants, and that's how the whole Barcel came into being. So that was the founders' vision. We are on the project, railway project, we are right from the planning stage to the entire life cycle of the project or the railway system we are associated. So our work starts normally in the planning stage in terms of conceptualizing a particular railway system, assisting in feasibility options, looking at technology options. Then we get into the actual engineering part of it. If it's kind of feasible, then we do the engineering. We help the client in procurement. We help them in identifying contractors. And then we take up the supervision part of it till the train starts running. So the next part is much more important because you also need to make it sure that it's running safely, it's running efficiently, and it's a sustainable system. So that is where planning for the operation and maintenance is where we come in. So our job is literally not over till the railway system is surviving. So that's what we do.
V. Ramakrishnan sir, you've completed over 1,000 projects, right? And what would you say are your top 3 or 4 standout ones that make you really proud?
Probably, all of you would remember the latest one, which Prime Minister Modi inaugurated last year. That is Pamban Railway Vertical Lift Bridge. And we were the project management consultants for this.
Wow.
About 72 meters in length. It lifts up 22 meters so that the large ships can pass through. It's on the sea. That makes it even more rather difficult. I move on to the next one, which I think every one of you would have heard about in the last few years. Yeah, Vande Bharat. And probably which you may not know is Vande Bharat has a manufacturing facility which was set up in Latur, Maharashtra with a Russian collaboration. Barcel was the sole project management consultant for this.
Wow.
It is expected to make 1,920 rail sets and also take care of the maintenance for next 35 years. And the third one is still running across, which is the largest infrastructure project in Africa. This is 1,800 kilometers long, the railway line, which starts from the port city of Dar es Salaam, Tanzania, and runs into the next country, Burundi. Fourth one, Adani started the first project, port project, Mundra project, somewhere in late 90s. And they needed a railway line to connect to the port. Barcel made the initial project study, DPR, detailed project report, for over 70 kilometers. It's one of the largest rail connectivity projects in India at the time, and Barcel did that.
So then would you say, or rather what really then sets Barcel apart from any other railway consulting companies? What would you say is that differentiating factor?
I would say that we don't look at any project just from an engineering perspective.
Sure.
What we look at the project is predominantly from the concept of the operations and the management of the systems. Thereby, it gives us the chance to communicate to our clients that we can give you a very holistic view of all the parameters that can impact the project and give you solutions for it. So that is how we look at it from that perspective. Barcel is a multidisciplinary consulting company. By multidisciplinary, I mean that all systems and engineering of the railway system are known to us. Having that expertise, we use that expertise to help the railways and the users with regard to how they should proceed and process on the projects per se.
We start from the early stage of conceiving and then we continue on in the strategic help. Apart from this, which you normally get in and then travel through, they have to be maintained, assets have to come for a long time, and they have to be efficiently managed. And what are the kinds of strategies that would require for O&M, operation and maintenance, asset management, and strategic changes. So this is where Barcel actually handles.
What would you say is the differentiating factor?
See, one of the major differentiating factors in my view is that we've been lucky to have experienced working in underdeveloped, developed, and developing countries.
Yeah.
So we are comfortable with all kinds of technology.
Correct.
We worked in as remote places as Sudan. We worked in as remote places as Mongolia. We worked in developed countries like the UK, countries like Australia. India. So that is one of the kind of experiences we get in. So any particular project or any particular problem which we handle, we look at it in a holistic way and not specifically from a technology which might only be known to some, because we know what. So our solutions normally are made to fit and not standard solutions.
Yeah.
So that I think is a major differentiation. And like my colleague Manu pointed out, that we look at it as an interdisciplinary one.
How would you say you maintain quality and that you maintain that very kind of standard approach, because there are such varying terrains, such varying technologies. So how do you maintain that?
We have a PMO which monitors all our projects, which is a project management office, a centralized place which monitors, standardizes our delivery, because the whole job of the PMO is to make processes standard across projects so that we don't deviate. Similarly, monitor projects so that we are able to pre-warn the project managers or even the client that these are the issues which would crop up, and prepare ourselves. So, yes, despite all these things, I must agree that delays do happen. It's not that these are foolproof ones, but this is what we kind of try to minimize and kind of mitigate this. So these are some of the, and our technical knowledge is something which we always comes in handy, like I said.
You mentioned about PMO, Project Management Organization. One distinctive feature of that, what is going to happen if the way that we have continued, what changes we must make so that we can chart our path, what trajectory we are going to go through. Is with respect to our plan, with respect to our understanding, and with respect to our aspirations. So that is exactly what the PMO is supposed to do, and that is what which tells well in advance. Yeah, you might go wrong in this quality, time, cost, or your own vision. Any of these things may be at variance.
Right.
So that we take care of through our PMO, which is really a strong one.
And there has to be some kind of flexibility or fluidity, I would imagine, right? With a constantly changing landscape, whether it is actual landscape or the socio-cultural or the economic, of not just this country but any country. So obviously nothing can be set in stone as well.
No, not at all.
What you always see predominantly is that adapting and changing and being flexible to what happens on the ground makes us little more proactive and predictive. So even to our clients, we are able to give them a predictive indication of the likely and the probable problem that can come about. And both he and us can get prepared how to face that.
Sure.
That's how we look at it in the concept of being adaptive and flexible.
I'd like to hear now, and I'm sure our audience would as well, from Barcel's employees and what it's like to work at this organization. Let's take a look.
We're living in a time where AI tooling, automation, and data intelligence is becoming a big part of how we operate. And at Barcel, we approach this not only as embedding these in our processes, but we are redeveloping our processes to ensure they work around these technologies and not just add on to these technologies.
Honestly, what surprised me more was how approachable everyone is, from my teammates to leadership. Everyone was very easy to approach and they never hesitate to help anyone.
This is our founder centenary here. So we are doing memorable things here. Companies offer a major transformation. Come and ride the way with us. That's what I would say to my peers when I'm recommending Barcel to them.
It's a high trust company where you just don't get responsibilities, you also get the room to express your ideas and also execute.
If you see, what the founders left isn't just a company, it's a standard. A commitment to values, ethics, and excellence driving towards the world class.
Fantastic. And what would you say is the vision for Barcel for the next 5 years, the next 10 years?
For the next decade at least, we would like to become a leading or a global railway consultant and advisory in management services to the customers at large. Once having defined that, we are also confident that we would be planning and would definitely like to grow at a CAGR of 25% year on year. Having said that, we then move to the organization per se, that we would like Barcel to be the leading Indian railway consultant globally.
But I'm sure that we will all together work from Barcel to see what best we can do to the railway industry in India and around the globe.
Thanks so much for this wonderful interaction.
Most important, and you have to be bullish when actually markets are bad. In bullish market, to be bullish is not a big deal.
Should we look at blue chips with the same awe that we used to?
So even if you are the bluest of blue chip, and if the valuations are upwards of 50-60 times, and the companies are glorifyingly growing at 5%, just run.
The argument is being made that because of geopolitical factors, etc., valuable companies in India are available at rates they haven't been for several years.
Yes, yes. That is what you should have independent mind. Market is going this side, left side, you should go right side.
By what logic am I going to sit there and talk to Jaydeep at Rebel and believe that the world is going to move to cloud kitchens as a word hadn't even been defined yet? Ajit, Furlenco, furniture rental. We gave him $6 million. He took $4.5 million of that and bought wood and nails and started making furniture. Most companies we give money to turn around and give the money to Google and Meta and start buying advertising. But the chaos that we live in here on a day-to-day basis enables so much great opportunity.
You've been on both sides of the table, right? Asking for funds and then giving them out as well?
A friend of mine and I had an idea that let's build a digital music business. And this is forget iPhone, pre-iPods, right? So, and you talk about timing and the importance of that. We were so early.
There's no real compulsion for you having to come to India and start a business here.
And if my job at ICICI was find new opportunities for us to leverage what we know to build, so look, why don't we go build everything we own? So in June 2005, again, not knowing anything about anything, I moved to India with a BlackBerry, a laptop, a sample term sheet, a sample diligence book, and they said, good luck, call us if you find anything.
Talk to me about Dunzo.
We weren't the right investor for something like quick commerce. I would say Dunzo did an amazing job as being a brand that people loved, really did a great job of creating a brand. They did a bad job of thinking about the economics of the business.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel.
India has set itself an ambitious climate target, and according to estimates, we would need anywhere between $1.5 trillion to $2.5 trillion in investment over the next just 4 years to meet our climate targets. So the critical challenge now is, how do we make green investment not just viable, but inevitable. And to unpack this, I am joined by an exceptional panel of experts. I have Varad Pandey, who works at the intersection of policy, capital, and global climate strategy. I have with me Jyoti Kirit Parikh, one of India's foremost voices on energy policy and sustainable development, and Arjun Dutt, who brings deep expertise on climate economics and India's transition pathways. I'll begin with you, Varad, and my question is that we often hear that capital is not the constraint, and there is global liquidity which is just looking for the right climate-aligned investment. And yet, in countries like India, we still have a finance gap. So what is the real bottleneck today? Is it capital availability? Is it risk? Is it ROI? What is it?
Thank you, Suchitna, and great to be here. In the oxygen panel is always a good one to be. Maybe just to start by saying that, the whole climate finance agenda can sometimes be anxiety-inducing. But I would say that, we need to solve the climate finance problem really in our own self-interest. And by that I mean that, India is probably the country which is, on the one hand, the most vulnerable to climate change, and CEW and IRADE have done some fantastic work on unpacking that. But we're also the country that probably has the most to gain if we can solve the climate finance problem. In our earlier panels, we talked about the whole energy security issue, but also jobs of the future, economic competitiveness, and resilient cities. So it's in our self-interest to solve this panel, and we should approach it with that mindset, and not so much from the old sort of negotiating mindset of what can we get from the international community, so to speak. Number one. Number two, I would just say that I think it is correct that we don't have a money problem. We actually have more like a plumbing problem. A phrase that I learned from Nandan Nilekani used to talk about this a lot. But by that, what I mean is that there is a lot of capital globally which is interested in investable opportunities, including in the climate arena. We need to channelize that capital by providing investable, predictable investment opportunities that make sense for investors. And in that context, and to your point of bottlenecks, I think there are three things. One is just the policy certainty, regulatory unlocks, wherever they are missing. Of course, we've done a lot, but there's still much done, and I'm sure we can unpack that a little bit. The second is bankable projects which are ready to invest. It's one thing to say we want money for solar, we want money for this, but where are the projects? Are there enough projects where investors can come in, put in their capital, with capital structures that actually make sense? That's the second thing. And then the third is, catalytic capital, or what some people call blended finance, which is really about using small amounts of public or charitable money to unlock large amounts of commercial capital. And maybe just giving you a very quick example. Today, we've talked a lot about solar energy today, but today a solar plant that is set up in India, say in a state like Rajasthan, has to pay a premium of about 80% in the cost of capital relative to a plant which is set up even in cloudy Germany, right? Which is ironic. And the answer which is offered is, there's perceived risk, and perceived risk premium, or I would say a risk tax that we have to pay because of currency fluctuations or offtake issues that sometimes arise. And in this situation, if there was an ability to provide de-risking instruments, like guarantees or first loss measures or currency hedging, you will see a lot more investors come in, right? So I think this whole notion of catalytic capital to de-risk is what we need to solve. It's the fundamental thing. We can unpack this a little bit more. It's hard, but it's doable. And if we can do it, I think there's no other country today placed in the world, especially amongst emerging markets, who is poised to benefit from this, because we have 6% plus growth in a volatile world. We have an aspiring middle class which is rising. We have 70% of our infrastructure which is still to be built. We are ahead on our Paris targets. So we have everything going for us if we can crack this.
Of course, I'd love to come back to you to unpack this further, but before that, I'll take a question to Dr. Parikh. Many panelists before us said that if there is policy stability, then finance will follow. But my question to you is, what kind of regulatory architecture should we have to ensure that all stakeholder priorities are considered and taken into consideration?
Well, India is growing in size of the renewable market, and the regulatory system is responding to that. It has developed many innovations over the time compared to earlier, and now we have a reverse bidding, and we have power markets, and we have power prices every 15 minutes, and there's deviation settlement mechanisms and so on. But I mean, in terms of finance, there's not a one pool for finance that is ready to be to be taken by people or banks or anything. It's the whole system which has to be affordable, and that can go by first of all the whole affordability issue is somewhat we are aiming for that. For example, LED became affordable by EESL's aggregating techniques. Then, so that, they bought millions of bulbs and brought down the prices from 800 rupees to 100 rupees or around that. Similarly, people are not paying for electricity, so that politicians' interference is making problems. Banks have to mobilize their green bond situations and so on. So everybody the whole climate has to support it. It's not one organization or the other, but the entire system has to move towards affordability, and it is being done, but gradually and slowly. Now, we thought that, okay, we will put up a lot of solar plants and wind power, but now the situation is such that power market shows less than a rupee price during the daytime, and night time sometimes touches 10 rupees because there is no solar power.
Right.
Or sometimes there is no wind power. So we need to even out these things by demand side mechanisms. So that's where the consumers come into the picture. And this whole field of renewables is, we call it prosumers. Means consumers themselves produce energy, and they respond. And they have to respond to the markets, to the prices, and to investments, their own investments, and looking for opportunities to participate. And India has done also take care of Surya Ghar, so women can participate, farmers can participate through agriculture pumps and so on. So that way, awareness spreads, and the consumers are no longer turning switches on and off. They are aware of where their electricity is coming from. Is it green or not? That this type of awareness is increasing, and we are doing this for our own energy security, our own clean energy, and I must say that it's not just the commitment to global bosses who are now busy bombing the world, but it's more commitment to our own people who need energy security, and who so we need clean air, we need clean
These
water
commitments are more existential in nature. Absolutely.
So we are doing it for our own purposes and security, and not to answer people.
Absolutely, point taken. I'll move to Arjun with the same question. That is, we've spoken about policy stability, we've spoken about the need for innovative finance models. But before that, what is the regulatory architecture that India requires to accelerate green investments?
So I think firstly, it's worth acknowledging that India has had considerable success in facilitating the flow of investment. Just as an example, the FDI into renewable energy in FY25 was triple of the pre-pandemic level. And this is despite the rupee depreciating by about 20% in that same duration. So it's worth acknowledging that generally the ecosystem that's been created has been quite conducive. Now, based on your question, the regulatory architecture, ultimately, there are various types of financing challenges, and I think Varad sort of referred to the bottlenecks that exist. In some cases, money is flowing on competitive terms, but the scale of financing needed in a short time is so large that conventional sources of debt, of capital, particularly debt capital, because a lot of these investments, particularly in clean energy, are debt intensive, may not be sufficient. So there may be need to unlock new sources, such as the bond markets, right, to supplement existing debt capital from banks and NBFCs. So in those terms, policy solutions such as credit enhancement in the bond markets. So the Honorable Finance Minister announced in the last year's budget a partial credit enhancement facility for corporate infrastructure bonds that is to basically address that specific bottleneck, right? There may be other types of challenges in the ecosystem. Into certain sectors, capital may be flowing on onerous terms because of perceived risks. So there again, certain types of, and this may be because of limited track records of performance, technology performance, sectors such as storage, in some cases electric mobility, where the cost of capital may be higher compared to the ICE powered counterparts. So again, providing some element of guarantees to establish that track record becomes important. So these are some sorts of specific interventions. From a larger policy and regulatory perspective, it is eventually about accurately pricing in climate risk, because we've discussed over the course of various deliberations today, India is one of the most climate vulnerable countries. In fact, CW research says 80% of India's population lives in populations that are in districts that are highly vulnerable to hydrometeorological disasters. So, and also intuitively we know that, let's say, every dollar invested in resilience results in $6 worth of savings, or there are various varying figures. But effectively, what's necessary is the appropriate codification of this in regulation that can help impact the cost of capital. Now, financial supervisors, both globally as well as in India, are at various stages of facilitating this translation between understanding the true value of investments in resilience, the benefits of investments in decarbonization, and appropriately pricing those benefits, right? And it is a journey, right? You've had the ESG disclosures by the capital markets regulator, the draft stages disclosures for banks and NBFCs under the RBI for climate-related financial risks. And of course, there are various other mechanisms. We talked about the carbon markets as well, basically about appropriately pricing each unit of emissions and every dollar invested in resilience. So ultimately, it is a suite of measures that the ultimate objective of which is accurately pricing each unit of emissions that is emitted and the value of each unit of investment in resilience. Because if this is codified through a structured framework, the cost of capital of investments that currently seems unviable because those benefits are not being factored in may become more lucrative, and eventually that may support the flow of capital. So that is, from a broader policy and regulatory perspective, the types of measures and the direction in which they have to be heading.
Most important, and you have to be bullish when actually markets are bad. In bullish market, to be bullish is not a big deal.
Should we look at blue chips with the same awe that we used to?
So even if you are the bluest of blue chip, and if the valuations are upwards of 50-60 times, and the companies are glorifyingly growing at 5%, just run.
The argument is being made that because of geopolitical factors, etc., valuable companies in India are available at rates they haven't been for several years.
Yes. That is what you should have independent mind. Market is going this side, left side, you should go right side.
By what logic am I going to sit there and talk to Jaydeep at Rebel and believe that the world is going to move to cloud kitchens as a word hadn't even been defined yet? Ajit, Ferlenko, furniture rental. We gave him $6 million. He took $4.5 million of that and bought wood and nails and started making furniture. Most companies we give money to turn around and give the money to Google and Meta and start buying advertising. But the chaos that we live in here on a day-to-day basis enables so much great opportunity.
You've been on both sides of the table, right? asking for funds and then giving them out as well?
A friend of mine and I had an idea that let's build a digital music business. And this is forget iPhone, pre-iPods, right? So, and you talk about timing and the importance of that. We were so early.
There's no real compulsion for you having to come to India and start a business here.
And if my job at IIC was find new opportunities for us to leverage what we know to build, so look, why don't we go build everything we own? So in June 2005, again, not knowing anything about anything, I moved to India with a BlackBerry, a laptop, a sample term sheet, a sample diligence book, and they said, good luck, call us if you find anything.
Talk to me about Dunzo.
We weren't the right investor for something like quick commerce. I would say Dunzo did an amazing job as being a brand that people loved, really did a great job of creating a brand. They did a bad job of thinking about the economics of the business.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad.
Question to Varad. You worked with the executive of this country for some time, and therefore I would want you to give me this answer from your experience of working with the government. What is that one thing that the government can do now to unlock large inflow of capital?
I wish there was a silver bullet. So instead of saying one, I'll give you 2 plus 1. 2 is things which are already happening, which just need to be pushed to the next level. These 2 are a green finance taxonomy for India. I think many of us would have heard of it, but I think great work has been done to bring it, and it's now been released in the public domain last year.
Yes.
It needs to be now finalized and detailed guidelines by sector issued, because taxonomy really determines where investors put their money. The second is the Reserve Bank of India. I think, Arjun, you mentioned this. There's a climate risk information system that the RBI has announced, so that banks can get an assessment of the vulnerability of their portfolios to climate risk. That also has to be the next step on that in terms of operationalizing it for the banks has to be done. So these are things, I think 90% of the work is done. We just need to push them out of the door. My pet one for this, since you asked for one new idea, is to have some sort of a national green bank, a green DFI for India. And what I mean by this is an institution that can cut across different sectors and focus on doing 3 things. One, creating an aggregated pipeline of investable projects that investors can look at, decide whether I like it, don't like it, and so ease the process of discovery of pipeline of investable projects. Second, provide the kind of catalytic finance de-risking instruments that I was discussing earlier. So in a certain project, let's say in Tripura, there's a project which has to be done, but there's, the risk perception of a northeast state is very high. So can there be a guarantee which can be provided by that bank that allows commercial investors to come in? So some sort of de-risking instruments. And third, to act as an interface between the Indian financial system and the international investors. There are lots of institutions trying to do green finance in India and doing a fantastic job. But I think they're all doing it in different domains. NABARD is doing rural green infrastructure. PFC is doing power sector infrastructure. We don't have an integrated development finance institution and a national green bank.
You're talking of something like an NIIF only for green projects?
For green, yeah. And this is not my idea. This has been suggested quite a lot in the global discourse. Many countries like Brazil, UK have something like this already in place. I think this will accelerate the momentum that we need on the plumbing of climate finance.
Right. I'll open up this panel. I have 3 related questions, and please take your pick as to which one you want to answer. One is straight from what Varad was just mentioning, that is, are emerging markets like India being unfairly benchmarked on ESG standards which were designed in the West for the West? That's the first question. Secondly, can India shape its own frameworks? We know a large part of work on that has been done. I mean, how can we push that? And the third question is, how effective are multilateral funds which have been announced from time to time, but in reality we only see money just about trickle in from there? Whoever wants to take whichever question. Arjun, let me start with you. Yeah.
So maybe let me start with the idea of the green bank, because in the Indian policy ecosystem, the Niti Aayog just last month suggested the idea of a national green financing institution, which is exactly the sort of integrated approach. And this can be most effective if it interacts with the existing ecosystem in a complementary manner, because there are existing institutions that are already lending. So if it can provide the complementary services such as the aggregation, such as the blended finance, that would facilitate that. In terms of the global discourse, at the UNFCCC, there is a concept of CBDRRC, common but differentiated responsibilities. That sort of acknowledges the fact that globally, historically, it's the developed countries that have been the major polluters on a per capita basis. So therefore, at least on paper, there is an acknowledgement that there should be a differential approach towards decarbonization, with developed countries, in theory, taking a more accelerated pathway to give more breathing room for developing countries. In practice, of course, that doesn't necessarily materialize. But of course, there should be, developing countries can credibly, claim some additional breathing room, given the fact that developed countries have in the past been the major polluters. However, in practice, of course, it is in all our interests to accelerate decarbonization for a variety of economic reasons as well. In this context, while there can be a variety of interventions, one approach, potentially given this is India is taking on the BRICS presidency, is for countries in the global south to sort of come together. So one potential proposal that we had sort of developed last year and submitted to the UNFCCC was the idea of a global south-focused green bank, an idea of the NGFI, but basically anchored by, let's say, the BRICS countries. So let's say an AIIB or an NDB, where India, China, Brazil have higher representation, teaming up with, let's say, a GIFT IFSC, which is India's International Facing Finance Center, setting up such an institution over there, servicing not just India, but a variety of other developing countries. So that helps address the challenges across potentially the BRICS countries, the global south as a whole as well. And finally, in terms of whether the frameworks in India should be different from their counterparts internationally, well, of course, there may be some requirement for bespoke solutions in the Indian context. Broadly, there should be some mappability or interoperability between global frameworks and Indians, because ultimately what you need is the seamless flow of capital. Because what you don't want to create is frictions in the flow of international capital into India. So from that perspective, while we may have certain frameworks that may be tailored to Indian context, there should be some formula for mapping or interoperability.
It should be aligned to the international frameworks.
Absolutely, to facilitate the flow of capital and not create additional barriers.
Absolutely, not create additional bottlenecks there. Large corporations have easy access to capital, but what about MSMEs? What should be India's strategy to decarbonize MSMEs? Whoever wants to go first.
So I have 2 points. One builds on the idea of the green DFI, because there can be various sort of barriers to small MSMEs accessing capital. There could be their credit worthiness, there could be untested credit history, etc. So to some extent, the types of guarantees that can be provided by a DFI can facilitate some flow of investment, right? But that is initial. What should be more durable is a durable business case for MSMEs to participate. Now, what can be that durable sort of incentive? One is that MSMEs that are part of global supply chains, global supply chains like the likes of Toyota or other car manufacturers or any other supply chains themselves have their own decarbonization targets. So what they expect is that their own suppliers and partners, including MSMEs, also have to embrace decarbonization. So now that opening up opportunities to participate in global supply chains can be the incentive to, basically push MSMEs in that direction. and complemented by appropriate support through the proposed NGFI where necessary to address specific bottlenecks can give the initial impetus to set the sector in that direction.
Gentlemen and madam, thank you very much for your time, for taking out time and joining us today. Thank you.
Most important, and you have to be bullish when actually markets are bad. In bullish market, to be bullish is not a big deal.
Should we look at blue chips with the same awe that we used to?
So even if you are the bluest of blue chip, and if the valuations are upwards of 50-60 times, and the companies are glorifyingly growing at 5%, just run.
The argument is being made that because of geopolitical factors, etc., valuable companies in India are available at rates they haven't been for several years.
Yes. That is what you should have independent mind. Market is going this side, left side, you should go right side.
By what logic am I going to sit there and talk to Jaydeep at Rebel and believe that the world is going to move to cloud kitchens as a word hadn't even been defined yet? Ajit, Ferlenko, furniture rental. We gave him $6 million. He took $4.5 million of that and bought wood and nails and started making furniture. Most companies we give money to turn around and give the money to Google and Meta and start buying advertising. But the chaos that we live in here on a day-to-day basis enables so much great opportunity.
You've been on both sides of the table, right? Asking for funds and then giving them out as well?
A friend of mine and I had an idea that let's build a digital music business. And this is forget iPhone, pre-iPods, right? So, and you talk about timing and the importance of that. We were so early.
There's no real compulsion for you having to come to India and start a business here.
And if my job at IIC was find new opportunities for us to leverage what we know to build, so look, why don't we go build everything we own? So in June 2005, again, not knowing anything about anything, I moved to India with a BlackBerry, a laptop, a sample term sheet, a sample diligence book, and they said, good luck, call us if you find anything.
Talk to me about Dunzo.
We weren't the right investor for something like quick commerce. I would say Dunzo did an amazing job as being a brand that people loved, really did a great job of creating a brand. They did a bad job of thinking about the economics of the business.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Presented by Canara Bank. Together we can.
Banking heavyweights HDFC Bank and ICICI Bank report a healthy performance in the fourth quarter. ICICI Bank's margins improve while asset quality remains stable. On the other hand, HDFC Bank sees a steady profit growth while net interest income also rises. Meanwhile, hours after the declaration of the crucial Strait of Hormuz trade route completely open, Iran has announced that the Strait of Hormuz is effectively closed once again in response to a US blockade on Iranian shipping and ports. Meanwhile, US President Trump insists Strait of Hormuz blockade remains until Iran deal is complete. Expects quick resolution as well. Iran warns Trump that Tehran will close the strait if the US continues its blockade. Crude gives up gains, and these are war gains as supply fears ease. Brent slides over 9% to near $90 a barrel after Iran signals a temporary Hormuz reopening. And the death toll in the Vedanta power plant accident in Chhattisgarh has risen to 23 after another laborer succumbed to injuries. Investigators are now examining safety lapses and sequence of events leading to the tragedy. On to markets then. Global markets zoomed after Iran announced opening Strait of Hormuz, and Wall Street ended at a record high on Friday as S&P 500 notches first close above 7,100, while Nasdaq also posted the longest winning streak since 1992. Good evening. You're watching Profit 360 with me, Shreyanti Singh, and over the next few minutes, we'll get you all of the latest updates from within the country as well as across the globe. But first things first, let's quickly take a look at a couple of earnings that have actually come out today. Banking heavyweights HDFC Bank and ICICI Bank have reported a healthy set of numbers when you talk about the fourth quarter. In fact, let's go across to Piyush, who's waiting by with the fine print when it comes to both of these banks.
A very strong set of numbers by HDFC Bank in their Q4 results. The bank has posted net profit of rupees 19,221 crore in Q4, higher than the estimate of 19,053 crore rupees. Both in terms of margins and asset quality, the bank's performance has improved, and the bank's board today also decided to extend a special dividend of rupees 13 per share and said that they will raise up to 60,000 crore rupees via bonds in the next financial year. We also, from the management side, there are a couple of important commentary coming in, which includes firstly the bank's MD Mr. Jagdishan saying that the legal review of former bank chairman Mr. Atanu Chakraborty's resignation letter is being conducted and will be completed in due course. He also said that the investors who had invested in the banks issued 81 bonds. They were not of retail nature, and everybody was aware what are the risks associated with such high-yielding instrument. The HDFC Bank's board member, Mr. Kaizad Baruch, also said that the process for CEO's reappointment or the appointment of a new CEO is underway, and the bank's NRC is fully seized of that matter, both with regard to chairman and CEO appointments. They will be made in due course. Shashidhar Jagdishan also mentioned how the board, in essence, himself and Mr. Baruch are rooting for Keki Mistry, who was appointed as interim chairman, to continue as the full-time chairman of the bank. The bank's CFO, Mr. Srinivasan Vaidyanathan, said that in a long term, bank's margin are likely to be stable or improve. And Mr. Jagdishan also alluded to the fact that the investments made in tech over the last 5-year period are now bearing fruits, and it will help the bank's ROA to improve in the next 2 to 3 years.
Absolutely, and thank you so much, Piyush, for joining us with all of those details. Do stay with us, and we'll come back to you when it comes to ICICI Bank. But when you take a closer look at HDFC as well in terms of the con call highlights, it's very important to take a note of what the management then is saying about the CEO reappointment. Let's in fact go across and listen in to what they have to say about this particular reappointment as well.
You mentioned how the legal review of the resignation by former MD is pending, but what markets were also eyeing was whether the bank's board will go ahead and apply with the Reserve Bank of India for a reappointment of your tenure, which I believe ends in later towards this calendar year. Can you provide us some clarity, Mr. Jagdishan, whether you are keen on continuing with the bank and what is the board's view on this particular matter?
Question with regard to the reappointment of Shashi Jagdishan. The NRC and the board is completely seized of the matter, and this will be taken up in due course as the necessary process would require. So let me assure you that this is a matter which is engaging the NRC and the board.
So there you go, that's the word coming in as far as HDFC Bank is concerned. But like I said, good set of numbers as far as ICICI Bank is also concerned. When you talk about the asset quality, that in fact has remained steady. Healthy profit growth is also what you're looking at. But Piyush is standing by with a detailed fine print when it comes to this one.
ICICI Bank has posted a robust set of Q4 numbers, beating the estimates. The bank's Q4 net profit stood at around 13,702 crore as against the analyst estimate of 12,930 crore. The bank also reported improvement in both its margin and in its asset quality as well, with lower slippages if we compare it to the last year. The bank's total advances, it's a big highlight that they grew almost 16% year on year to 15.54 lakh crore. These numbers, this sort of a loan growth, double-digit loan growth, we have not seen over the last 1 or 2 year period. And the bank's business banking, corporate banking, even rural and retail banking segments have done well in the reporting quarter. Q4, as we understand, is the busiest quarter for all the bankers. The bank's deposit also kept pace, although it was the growth was slower than advances at 12%. Overall deposits stood at 17.95 lakh crore, which provides a comfortable CD ratio to the bank. The bank said it is trying to focus on getting low-cost CASA accounts to its franchise, quality customers who will prefer the bank as the primary banking partner. The bank management also said that it saw around 109 crore rupees of trading hit on their other income because overall the RBI has measures taken with regard to the NDF open ceiling diktat mandating it at 100 million, and apart from that the overall fall in the bond yields, this cumulatively weighed on the bank's trading income. Although the hit is not as major as Q3 FY26, the loss was slightly even higher. And finally, the bank said that it does not see material risk to its business because of the West Asia conflict. It says that it is keenly monitoring the development. However, in Q4, it did not really see any material development to its core business metrics because of the West Asia conflict.
Absolutely, and thank you so much, Piyush, for getting us all of those details when it comes to the earnings fine print as well. But let's also take a closer look in terms of some of the commentary as well coming in from the bank, especially when it comes to loans and deposit growth. And let's go across and listen into a snippet of the commentary that they had to give about this as well.
What would be your guidance in terms of both loans and deposit growth in FY27? The other question I wanted to understand, you are the second largest private bank and have a fair view of how macros will be impacted, the second and third order impact from the Middle East conflict on banks' balance sheet.
Given the overall scenario, there has been an immediate impact on market yields, which you are aware of. There has been an impact on currency, equity prices, and some of this is reflected in the numbers for the Q4. Of course, during the Q4, there was a very little period of the West Asian conflict. We will continue to monitor these indicators. The impact on economic growth and potential credit demand will depend on the duration of the conflict. Of course, even RBI has mentioned that there is some amount of uncertainty on account of supply shock. We do hope things become better sooner. As far as we are concerned, we do have a strong balance sheet in terms of liquidity, provisioning, capital, and a good technology architecture. And we will continue to leverage our franchise and grow within our risk parameters, and we will continue to monitor developments across.
Alright, then there you go. So that's the word coming in from the management. They're not penciling in much of an impact when it comes to the Middle East conflict right now. So that's ICICI Bank for you, but it's also Yes Bank that reported a largely stable set of numbers when you talk about the fourth quarter. Of course, the asset quality has improved here also, but let's also go across to Shivam, who's standing by with the earnings fine print for this one.
Good set of numbers coming in from Yes Bank for quarter for FY26, and the net interest income of the company has improved by 16% and currently stands at 2,638 crores. Now this growth was aided by reduction in lower interest expense and reduction on cost of deposits. Net interest margin has also gone up by 10 basis point on quarter basis and stood at 2.7%, and this was on back of deposit repricing, higher share of CASA and lower high cost borrowings. Operating profit has also seen a growth of 23% as operational expenses has declined in the growth rate. As a result, PAT has also gone up by 45% and stood at 1,068 crores. Taking a look at the asset quality, it has also improved, and the GNPA stood at 1.3% and the NNPA stood at 0.2% on a quarter-on-quarter basis. Now management has met the return on asset and NIM guidance given in the previous quarters. Now taking a look at the key points from the con call, the bank is aiming for a 13 to 15% of loan growth next year, and also the bank has given an objective to improve the return on assets by 25 to 50 basis point over the period of next 2 to 3 years. Also, bank is aiming for a net interest margin of 3.25 to 3.5% over a period of 2 to 3 years.
Absolutely, and thank you so much for joining us with that earnings fine print when it comes to something like a Yes Bank also. So all three of these banks are going to be very important to watch out for on Monday as well. But in terms of something else that you're watching out for, Prime Minister Modi will be addressing the nation at 8:30 p.m. today. There is no confirmation yet on the subject of the address, so that's really triggering speculation on what the PM would be speaking on, but the timing of the address, that's very important right now because it comes a day after the Women's Reservation Bill failed the Parliament test amid opposition backlash over the government's approach. Now, the Prime Minister's last address to the nation, mind you, was on September 21st, 2025 when he briefed the country on GST 2.0 reforms. So that's the latest coming in. Of course, that's something that we'll definitely be watching out for. And that's also something that you should be keeping an eye on. Alright, and so that's what you're marking on your calendars as well in terms of that very important speech. But let's also move on and get you the word and the latest on the developments that are moving fast in the Middle East. Iran, in fact, has announced that the Strait of Hormuz is effectively closed once again. And that's in response to a US blockade on Iranian shipping and ports. So as a result, you do have 2 Indian-flagged vessels that were forced back from the Strait of Hormuz, while sources have confirmed that the crew suffered no injuries or damage. Luckily, it is clear that the celebration of the strait being completely open did not really last all that long. In fact, the latest coming in on this is news that Iranian ambassador is summoned by India's MEA over the Hormuz firing on India-flagged oil vessel. In less than 24 hours, things have gone back to really how they were. This means that the control of who passes through the strait will still, it still remains with Tehran, and very much so. Let me take you through what's happened in a straightforward order right now. So last night, Iran's Foreign Minister Abbas Araghchi announced the strait was fully open again for all commercial ships. So that's one announcement that you're looking at. Let's also shift focus and shift the spotlight onto President Trump in terms of commentary coming in from him. He's overnight made several statements. He's welcomed the reopening on social media, yet made it clear that there's a blockade. There's a US blockade on Iranian ports that will stay in full force until a complete deal is done, including handing over Iran's enriched uranium, which he has in fact called nuclear dust. In fact, let's also listen into what he exactly then had to say about the ceasefire and if he's planning to attack Iran again or not.
If you don't have a deal by Wednesday with the ceasefire ends, will you extend the ceasefire? I
don't know. Maybe not. Maybe I won't extend it. Okay. But the blockade is going to remain. But maybe I won't extend it. So you have a blockade, and unfortunately we'll have to start dropping bombs again.
Alright, So there you go. That's the latest commentary coming in from Trump as well. But this particular blockade that he's talking about, that didn't sit well with Iran at all. Iran, in fact, has made it clear that the passage through the Strait of Hormuz is going to be conducted based on the designated route and with Iranian authorization. Moreover, you do have Ismail Baghel, the spokesperson of Iran, also writing on X, and I quote here, "Enriched uranium is as sacred to US as the soil, to us as the soil of Iran, and it will not be transferred anywhere under any circumstances." End of quote. As you can very clearly see, he's emphasizing the importance of enriched uranium when it comes to Iran. And that's the commentary coming in there. So the bottom line is that ships can only move on routes approved by Iran. And the Strait of Hormuz is back to its previous condition effectively. So that's the entire timeline that you're really piecing together there. And that's the latest coming in terms of all of that. And that's something that you're looking at. But when you talk about Brent as well, that in fact has slipped to near $90 after Iran signaled Hormuz is open, triggering an unwinding of that war risk premium as well that you've seen. Even as prices rise or ease right now, you do have physical supply damage that still keeps crude in the $85 to $90 band. So that effectively what that does is that it reshapes winners and losers across India's energy stocks as well. In fact, Parth is standing by with some more details here.
So we have seen how the Middle East war has impacted the supply of crude all over the world. But to put things into perspective, let's have a look at the data provided by the International Energy Agency. Well, they've said that the global oil supply dropped by 10.1 million barrels per day in the month of March. And not just that, the global inventories have also fallen by 85 million barrels in the same month. Also, the stocks that were outside the Middle East Gulf region have also been depleted by 205 million barrels. So this is a huge disruption coming in. And this disruption will now take several months to re-establish itself to the normal levels of exports and production. Now let's have a look at what the analysts are estimating. They're saying crude to remain at the range of $85 to $90 per barrel for the next 12 months. Pre-war levels of crude were around $70 a barrel. And not just crude prices, the gas prices are also expected to remain elevated at the range of $15 to $18 versus their pre-war levels of $10. So this is a huge thing coming in, that the higher energy prices are going to become the new normal for the world going forward. Now let's have a look at some of the companies and sectors that are going to be impacted from this. Starting with the oil marketing companies, they will see their marketing losses ease further. Also, their LPG under recoveries are going to shrink in the upcoming quarters as well. Now let's have a look at some companies like Reliance Industries, which will see an uptick in its profit margins, and also the export duty rollback, which was recently done by the government of India, will provide a nice tailwind to the company, increasing its profits going forward. Also, some companies like ONGC and Oil India will also see a growth in their earnings as the crude has dropped from its peak levels of $120 in the range of $85 to $90. But there are some companies that will be impacted negatively as well, starting with Petronet, because they are heavily reliant on their gas imports from Qatar's LNG plants. It will increase their import cost, which will put a pressure on their margins and earnings as well. Also, the city gas distributors, which are companies like IGL and MGL, will see their gas costs go up and see some pressure on their margins as well. So these will be the key companies and sectors that investors need to monitor going forward, along with the developments in the Strait of Hormuz.
All right, then. Thank you so much for getting us that entire analysis as well, Parth. But let's also shift focus onto another very important update, the death toll in the Vedanta power plant accident in Chhattisgarh Sakti district has risen to 23, and that's after another injured worker succumbed during treatment. Now, a central team from the Department of Industrial Safety has reached the site and has begun a detailed probe following the state boiler inspector's report as well. You do have this explosion that occurred on 14th April, and 14 injured workers are still undergoing treatment at various hospitals. Investigators are now examining safety lapses and sequence of events leading to the tragedy as well. In fact, we do have Sanjeev Paruthi, industrial safety leader and expert in process safety as well as accident investigator, joining us on the show right now. So thank you so much for taking time out and joining us this evening. Right now, first things first, what I wanted to ask you is that why is there a thorough probe that is important? And what is the need for this probe to really, be covering all of these important aspects right now?
Hi, Srishi. Thank you for inviting me as a, expert on this topic. So I would like to tell you that Vedanta boiler accident is not the only single accident happening in India. There are several accidents happened in series in last year, if you see, and a lot of people died. So if a investigation happens, accident investigation happens, we can reach to the root cause of the incident. So as the investigation is under process, so we may get to know various aspects why the accident has happened. But I would like to draw the attention of the people on various aspects, particular to this case and in general to other cases, why in India this is happening. So particular to this case, what I believe, although it is in the media, the accident has happened because of high pressure, overpressure has taken the boiler to the explosion part because a tube has got leaked and there was a steam leakage and there was a fuel accumulation. So due to the domino effect, a lot of other series of incidents have happened and then a serious major explosion has occurred. So this is related to process incident. But majorly if we see why the tragedies are happening, so this is basically absolutely failure of various elements. One is the process failure element, that risk management has not been done or it has not been implemented properly so that the accident could be prevented. The people mainly in India focus on mitigation part, that after the accident has happened, let's do the accident investigation. While in India, the culture should be that risk assessment should be done and all the preventive measures should be taken so that accident can be prevented. So it's a cultural issue. So there can be various other factors also, that workplace factors can also be there, human factors can also be there, process factors can also be there, maintenance factors can also be there. So there can be lot of system issues also, that complete safety management system gaps can also be there. So there can be, behavioral or cultural issues can also be there. So let's wait for the accident report and see that what are the main root causes.
No, absolutely. It looks like it could be a confluence of factors and very difficult to pinpoint exactly what it could be, at least at this point in the investigation. But speaking of preventive measures that you've highlighted, what safety mechanisms like alarms, interlocks or shutdown systems are meant to prevent this, and where do you think gaps can really be occurring then?
When we talk about the preventive strategy, so in preventive strategy, the first part is that there are two types of things. One is the process. This is typically a process incident. So in the process, we do need to carry out the HAZOP study. HAZOP study is mainly about hazard and operability study of particular process operations. And the second type of risk assessment is the workplace risk assessment, which is about hazard identification and risk assessment of activity-based risk. So when we talk about the preventive strategy in the process, so we need to see that there should be proper alarms, there should be basic process control system, there should be emergency process shutdown system, there should be, so these are the part of the preventive strategy. So when we go to the mitigation strategy, so there should be passive systems like fire protections, or there should be relief walls, or they should be, ruptured discs. So these kind of, if controls are maintained, or if the, mechanical integrity part, like the maintenance procedures are up to date and the people are well trained, they're qualified, they're certified, and the NDT inspection checks are done on time, and, the right kind of material is being put, or the process is typically operated at the design intent. It is not away from the design intent. So these are all the preventive mechanisms that can be taken into the study.
No, absolutely. And thank you so much for brilliantly summing that up in terms of what are the exact measures that are usually there, that are in place to be preventing a tragedy of this magnitude as well. But sir, before we let you go, I also wanted to get a sense of what key lessons you think we should be taking, or the industry should be taking away immediately to reduce the risk of similar such incidents.
I think as I see, because I'm from the same industry, I see that the people are putting already a lot of efforts, and even government laws are coming. I think the main thing is that all the company, top management should be very committed towards the safety of the people and the business, as well as their brand name, because safety should be the first priority. And we can say, to sum up this, that safety first and production must. So these two things, I think, will give you a better advantage. And the risk assessment should be done and it should be implemented well. And all, even not only the top management, even the officers, managers, or even the workers, contractor workers, they should follow the safety rules. They should know the safety rules. They should know the process. They should know the standard operating procedures.
No, absolutely. And thank you so much for helping us out with all of those insights, sir. So there you go. That's the kind of lessons that you're picking up from a tragedy of this magnitude. But that's all that we could pack for you on this edition of the show. Thank you so much for tuning in. But as we do that, do remember that at 8:30 you do have PM speech, and that's something that you should be tuning to as well.
Most important, and you have to be bullish when actually markets are bad. In bullish market, to be bullish is not a big deal.
Should we look at blue chips with the same awe that we used to?
So even if you are the bluest of blue chip, and if the valuations are upwards of 50-60 times, and the companies are glorifyingly growing at 5%, just run.
The argument is being made that because of geopolitical factors, etc., valuable companies in India are available at rates they haven't been for several years.
Yes. That is what you should have independent mind. Market is going this side, left side, you should go right side.
By what logic am I going to sit there and talk to Jaydeep at Rebel and believe that the world is going to move to cloud kitchens as a word hadn't even been defined yet? Ajit, Furlenco, furniture rental. We gave him $6 million. He took $4.5 million of that and bought wood and nails and started making furniture. Most companies we give money to turn around and give the money to Google and Meta and start buying advertising. But the chaos that we live in here on a day-to-day basis enables so much great opportunity.
You've been on both sides of the table, right? Asking for funds and then giving them out as well?
A friend of mine and I had an idea that let's build a digital music business. And this is forget iPhone, pre-iPods, right? So, and you talk about timing and the importance of that. We were so early.
There's no real compulsion for you having to come to India and start a business here.
And if my job at ICICI was find new opportunities for us to leverage what we know to build, so look, why don't we go build everything we own? So in June 2005, again, not knowing anything about anything, I moved to India with a BlackBerry, a laptop, a sample term sheet, sample diligence book, and they said, good luck, call us if you find anything.
Talk to me about Dunzo.
We weren't the right investor for something like quick commerce. I would say Dunzo did an amazing job as being a brand that people loved, really did a great job of creating a brand. They did a bad job of thinking about the economics of the business.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters.
presented by Canara Bank. Together we can.
Welcome to the town hall with Ramdev Agarwal, Perma Bull, someone who has always been very positive on Indian markets. And I would say, first of all, Ramdev ji, welcome to the NDTV Profit Studios.
My pleasure.
We think it's been too long since you made it to our studios, but we're happy to have you here. And of course, our team is here to ask you questions as well. We've opened the lines to our viewers as well. So whoever wants to ask you questions has the opportunity. I hope that's okay with you.
No, that's fine, but please don't ask me about any individual stocks. That's about it.
That, of course. We know the rules. So we know the rules, guys. You know what questions to give. Ramdev ji, very warm welcome. And I think it couldn't be a better time to talk to you right now because you've always been optimistic, bullish about the Indian markets. And in the last 10 days, those who had faith have been rewarded. Would you say?
Yeah, I mean, see, in anything, that is most important, and you have to be bullish when actually markets are bad. In bullish market, to be bullish is not a big deal. What's big deal about it? I mean, market is up 3%. If you are not on the buy side, even if you are short, you say I'm bullish. You know, so you have to be bullish when chips are down.
But were you bullish, say, 10 days ago when chips really looked down? There was a point at which we were thought we were brink of maybe a nuclear war. And इसमें अजीब सा ये था कि युद्ध इतने देशों के बीच में हो रही है. India seemed to have been suffering the most as far as equity markets are concerned. Were you bullish even then?
Yes. See, because there are two types of dialogue. When you have 10 months dialogue, it's a very different thing. When you have 10-year dialogue, in your own mind, different things will come up. You know, if you want to be right or wrong in 10 months' time or 3 months' time or tomorrow or day after, then, God knows what to see. Probably just about who's buying, selling and those kind of stuff. But when you are buying for 10 years, 20 years, I typically think that I'm buying for 25 years. You know, it's different that I'm not right every time. But I always buy thinking that it's 20, 25 year kind of bet. So the dialogue is very different actually. In my mind dialogue is very different. And that keeps me, if you see my last valuation study which we did just now, see what is the summary of the report? The summary of the report is the world is becoming wealthier year after year. If you see last 50 years, 75 years, world is becoming wealthier. India is becoming wealthier at double the speed. World is becoming wealthier at 7% dollar, nominal dollar. We are becoming wealthier at 14% nominal dollar. Now 14% is not double of 7%. If you take a 10-15 year profile. So India is emerging very rapidly. Of course other countries are also emerging like
it's
China.
It's also our base case, which is the reason why India is emerging more rapidly.
That is also one of the same. That also allows me to be emerging for next 50 years.
Yeah.
You know, so it's a very long story and there are very few compounded predictable countries. One is of course, nothing can beat US. US is one and the only one. You know, like in last 15-20 years, US has gone from 30% of total global market cap share to 50%. You imagine, the world is growing at 7%. In that, US went from 30% to 50%.
Sir, FIIs ये सब क्यों नहीं देख रहे हैं?
See, they are for 10 months. They want to be right in the next 1 year, 2 years. I don't care. I want to be right on 10-year basis.
So you're saying that the average investor should not worry about the FII figures today. We were earlier this morning speaking with a prominent market voice, and he said exactly this, that the conversations he's having with his friends who manage India for global funds is that हम office आए नहीं आए कोई फर्क नहीं पड़ता है. No one is looking at India right now globally.
Yeah.
Why aren't they seeing all of these points that you are talking about?
I mean, India for them is very small. Say, like, if there is one micro cap where a lot of excitement is happening, I don't care. Because in my scheme of things, that 100, 200 crore company or 300 crore company, I cannot buy enough. So I don't bother about what's happening in that company. India, in their mind, is something like that. And particularly if you're sitting in US, which is now $70 trillion market cap, where single companies are bigger than India. Well, would you bother about an Nvidia? Or would you bother about thousands of companies in India? So it has become like that, and US is doing extremely well. thanks to this AI and AI-led capex and whatever is happening there, is crazy. I mean, it looks scary. I mean, if they have 55-60% of the global market cap, can they go to 70-75% types? That's the kind of run. If you look at internet-based businesses, they're the only guys. There's nobody.
From a 10-year perspective, how are you looking at AI? Are you looking at it at the next big thing? We should be worried because that's the horizon, or is it something which is being overestimated right now?
It's very tough to say for me, but it's a very big development. These kind of times happen every 15-20 years. I mean, we saw the mobile phone coming in, then we saw internet coming in, then we saw the internet and mobile coming together. That exploded everything out here. I mean, literally everything, payment and scheduling and your road, everything is out here, and more things are coming. So we have seen that advent, and now AI will do its own magic. In what way? Consumer AI we have seen, where you can get your essays right for your son, you can get your letter well written. Those kind of things are done. But the enterprise AI is a very different ball game, and that's where enterprise and government AI is not that easy nut to crack. It's not that easy as people are talking about. That will also require a lot of intelligent people to run it. You can write your own essay on your own, but you can't run a company with, you can't give one instruction and the company will be run. So yes, you might do your things faster, but it's also not the situation that requirement of AI or software are limited. One of the funny thing or best thing is when things become cheaper, particularly software becomes cheaper, demand is unlimited, literally infinite. So say today, if there are 1 million projects are there in the system, and the 1 million projects could be say 20% or 30% faster in execution, there are 10 more million projects waiting to happen. So what do you do with that? So I think eventually demand will explode. That's my sense. Right now for a year and a half, there will be readjustment of the old model and new model, and then eventually the new model will explode. I mean, once the software is developed, once the way enterprise will adopt AI, if that is clear, I think all the projects will be done by the same services companies.
So you think IT companies will survive, thrive and come out smelling of roses?
Survive for sure. How much they'll thrive, it depends on their own adaptability and at what pace diffusion of the technology happens through enterprises.
Okay. So, in fact, we have viewer queries coming in. I'm not going to hog all the questions from Ramdev Agarwal, so don't worry. All of you viewers will get a chance. So will our team over here. But there is one quick query which has come in while we were talking. If you had to hold only 5 stocks or sectors for the next decade, what would they be? And Ravi specifically saying, is it a right time to invest in IT space given the AI disruption? Nothing stock sector specific. But there's always a debate about IT, and we get both views.
Yeah, so in IT, I have been saying for last 2-3 years since I advent of this AI, that it is headwinded. See, I met somebody very senior from Microsoft. He said the era of headcount driven model is over. See, if you have 500,000 people working for you, you don't need another 500,000 to double now your revenue. So, one part of the engine of Indian IT is kind of gone, where they used to add people at 15-20% every year. So that's gone. So will they be able to increase the productivity of the people or profitability per person at that pace? But I'm not competent to answer that. So I would still say the sector is headwinded. I would be very cautious unless I have extra insight. I would not put in more money.
Okay, cautious on IT. Let's get some questions in-house. Alex is starting off first.
So, Ramdevji, always a pleasure listening to you. And the question I have is more strategic in nature or tactical in nature, which is that oftentimes over the course of the last decade, we've spoken about fill it, shut it, forget it, patience, etc., and looking at the long-term horizon. But that the reality is that we remember the winners of that strategy. To say that in the 90s you had an infra that came in and now look at what infra has done, right? But you don't remember those that have fallen by the roadside. Is there a pitfall holding on to companies that have been relative underperformers valuation wise, because they can have a hole in your portfolio as a result of that? When do you pull the plug?
You have to see, fundamentally in investing, you have to understand what you're doing. What stocks you're buying, why you are buying, what is the source of value, where is the price and where is the value. That understanding is constant, not constant, because the value is continuously changing. As the company is growing, the value of the company is growing. Say like when we got listed, we were 1,000 crores. Today we are 40,000 crores. And we are growing at 25%. So my value, I hope I am able to grow my value. So, so long as the value of the company is growing, you are pretty comfortable even if price is fluctuating a little bit. If the value of the company is not growing, then obviously you have to take your call.
But even blue chips, you're happy to sell. And
forget about blue chip, red chips. I'm talking about a company. So let's.
I'm going to actually take you up on that. Forget about blue chips, red chips.
Yeah.
Do you think that classification and definition has changed over the last few years? You have mid-cap companies which are at huge market cap and value. And that old way of just looking at blue chips with the depth of the Indian market right now is also changing?
Come again.
My point is, should we look at blue chips with the same awe that we used to? Just taking from the point that you made about blue chips and red chips.
So I think one of the big differences is the availability of data. Now markets will become far more aligned to data rather than this. See, when you had scarcity of data, so you are saying, okay, you are a Tata, you are an FI, you are a what is that, multinational company, because they were known for terrific management and markets were generally reasonably priced. If the market is at 12, 13, 14 P and you are a multinational company, Colgate, Lever, underpenetrated categories and all, so your management was never a concern. So you made a lot of money because of aligning with them. But now, because those quality has been so much, thanks to Buffett, the quality has been so much overpriced, irrespective of the growth, that they have been stuck at 50, 60, 70 P multiple. Whereas I am getting the companies, young companies at 15, 20 P multiple and growing at 20, 25%. Who the hell bothers about those 70, 80 P multiple? All the P's will get corrected. They will not make money. They cannot make money at 70 P. If they don't grow at 25, 30%, there is no hope in hell to make money. So even if you are the bluest of blue chip, and if the valuations are upwards of 50, 60 times, and the companies are glorifyingly growing at 5%, just run.
That's the big one. I think that's the clearest answer we can get to blue chip and red chip. Puneet has a question there.
On continuing your point, because within the Nifty, you've seen IT and FMCG, both those counters haven't performed well in the last 5 to 6 years, and the growth hasn't been there. So continuing your point, are these largely dinosaurs essentially in that sense, and will you see that change? Or should people or investors look at the broader end of spectrum, and how do you look at from that perspective?
So there are no dinosaurs in these companies, but there are phases of tailwind and headwind. In every business, while they are growing, say HDFC Bank. I'm just giving an example. Like they came in 85. They were 1,000 crore company. Then they got listed. It was less than 1,000 crore company. It got listed $40, 200 crores of equity. So it was definitely less than 1,000 crores or 1,100 crores kind of market cap. Which in next 25, 30 years, it became a 12 lakh crore company. Almost became number 2 company of the country, and it was a pride of the world in terms of banking system. Okay, so they had a continuous tailwind from the management side and from the business side. Tailwind is still there in the business side, but there is a management transition, so it is taking a breather. It doesn't mean they have become dinosaur. They will, once everything transition is over, they'll again get the growth path. What do you do now? You made a lot of money out of them, or they look cheap relatively. And what do you do? So those are difficult things,
Yeah, no, please answer that question. That is, sir, you
company specific.
No, company question, company specific, nahi, but those difficult questions have to answer, because I'll put it in context. I'll put my question in context. The argument is being made that because of geopolitical factors, etc., valuable companies in India are available at rates they haven't been for several years, and for no fault of theirs. These are things that are out of our control. Should you be looking at them with fresh eyes?
That is what you should have independent mind. Market is going this side, left side, you should go right side. Because the data and valuation is telling me that there is a tremendous opportunity in banking side. What has happened is the private sector banks have been bought by foreigners. Almost 40 to 50% of the banks have been bought by them. Literally they own the private sector banks. I think 45 or 48% of HDFC, which is like almost 12 lakh crores, so 5-6 lakh crores worth of stuff is lying with them. And for somehow they're not in love with India. So they've been selling. And what will they sell? What they have, they'll sell. They can't sell what they don't have. So they are selling. So there is a continuous pressure on that. And Combined with that, you have whatever is happening in the transition of the bank. So that has depressed the price. Now, if you get the premium bank at 13, 14, 15 PE, how can other banks be any more expensive? The whole sector is under crowd. And the banks are extremely, if you look at their numbers, their gross NPA has never been so low. Net NPA has never been, it is pristine banking system right now. Growing at, you saw the yesterday credit growth, 16%. I think this is the best sector to have. 16% system growth, and you are getting at 12, SBI you're getting for 10p, HDFC over 13, 14p, something like that. You know, all of them are sub 15p, and your credit growth is 16%. I think if you don't make money here, at least my system tells me that you should be making decent amount of money in the next 1 or 2, 3 years.
Okay, we have a query coming in. I just want to see who it's from. Krishna Kumar from Bengaluru. As we are speaking, there's a part where he's saying, big fan of yours, watch your videos regularly. Sir, aapke bahut fans hai jo abhi dekh rahe hain. He's saying, I have 10 lakhs to invest for 9 to 10 months with high risk return. Please tell me the 2-3 shares, not mutual funds. Sir, share to batayenge nahi. First of all that. I want to come to the thought behind the query. Invest with a horizon of 9 to 10 months with high risk, high return.
So I have no idea for 9 to 10 months, guys. I'm telling you.
No,
I'm all about 10 years.
Is this the worst idea for investors right now?
No, it's not. See, there are million guys, there are million ways of making money. The beauty of the markets are like that. You know, if there are million guys, actually there are million ways of making money. You have found your way of making money, you don't have to bother about jokers like us. You know, so, because I have my way of making money. I am at peace. I run a company and I invest. I enjoy investing. So, since I have made from zero, I can also be I can be extremely patient guy. You know, I can see a lot of adversity. I have seen a lot of adversity. I have seen 67%, 50, 67% correction in the market in my portfolios. So, it doesn't, I mean, the downside, so long as the story of the company is right, it doesn't hurt me. It doesn't pain me. It doesn't take my sleep away. No. I'm pretty peaceful. But is that the kind of temperament everybody has? Obviously not. You know, so you have to see your temperament and what works for you and how you have been able to in market. It's not that today is day one. So if you are there for 5-10 years, you must have found your way of making money. Just stay with that and keep making money.
If you have actually made money, if it's worked for you. That is the important part.
No, I think in India, there is. I can challenge. In last 5 years back, if anybody has come, if he has not made money, I need to get, and if he has invested, he's not speculated, of course, almost 90% would have lost money. But if he has invested purely, he would have made money, maybe not 20%, 30%, but 10, 12, better than fixed income, he would have definitely made.
I want to ask you a question very, candidly. In the last 5-6 weeks, when all of this war stuff started coming in, we saw crude go up to 110, 119, no idea, people are talking about 150. Was there any point at which the bull inside Ramdev Agarwal was scared or worried?
No.
Were you worried?
No.
Not one single day?
Why I'm telling you? Because ultimately, we are not in the, this is not our war. We are indirectly impacted. Iran itself is just about 0.3% of global GDP. First, when this kind of thing happens, I go and see the Wikimedia. How big is the country which is under destruction? So Iran is just about $300 billion country. Okay, why it became so serious is because of the Gulf of Hormuz, where a lot of this oil comes out and 15-20% of oil moves, petrochemical moves, your LNG moves, your plastics move, helium moves. So those things, I mean, so many rich countries are sending their petroleum products out. So that became a issue, and then oil started climbing. And we are 70-80% energy importer. So directly and indirectly, that is started hurting the company's performances, supply chain, and the cost structure. And so like plastic products are up by 30, 40, 50%.
Yeah.
So obviously the packaging cost, so wherever packaging intensity is there, those companies have to pay, and can they pass on immediately? Obviously not. So it brings inflationary pressure. Government is absorbing to some extent petrol, diesel hike, but how long? After elections and all, they will also kind of reconsider this. So that will take away my purchasing power out to whosoever is supplying the energy. So to that extent, they'll be hurt. And hence, the corporate earnings will be hurt. So if my corporate earning was to grow by 15% next year, that might grow at 13%, 12%.
But it didn't bother you beyond that.
Yeah, and market had already corrected. So what is there to bother?
Okay, we're going to mix it up. Kush Bora for our question, and then of course we'll come to others over there. Yes, Kush.
Very good morning, Ramdevji. Two questions, in fact, if I can be a little greedy. One, typically these war-driven or event-driven bottoms, make the base for the next bull run. But with FII participation not returning, do you see that happening in the next 1, 2, maybe 3 years? That's the first part. And the second part is we've already seen that the retail participation, direct retail participation in markets is starting to dwindle. So in part, you've already answered this, but how does retail approach this? Typically you see when the markets are rising, retail comes in, and when markets go down, retail exits. So how does a retail participant and individual approach this? Asset allocation, or still continue and have that faith in the markets and still keep on investing?
I don't know, so many questions are there, which one to so I'll tell you, see, market is going through structural change. In last 5 years, say till 2020, it was very FI dominated market, and Indian institutions were not that strong because retail flow was very, very limited. Come 2020, and instead of 300,000 customers, we are getting as a system 3 million customers, 10x, and till last month we got it. Okay, so this is structural shift of the Indian market, so DI flow is staggering, and it will keep becoming bigger. I don't have any doubts. Maybe for 6 months, 8 months, it could slow down. But if you look at say 5 years henceforth, it will double. If it was 5 lakhs or 7 lakhs this year, it will be 2x of that in 5 to 7 years. So that will keep increasing. There is no doubt about it. Now what FI will do? FI will keep selling. My sense is they'll keep selling till India stays here and the world stays here. Okay, they are the only arbitraging machine between India and rest of the world.
Yeah.
Because we are not allowed to go out. In fact, I wrote to one CI or somebody that please we should also be allowed to go out in a limited way through ETFs or something, so that the level here is little lower.
Yeah.
So that FIs don't have any encouragement to go out, and actually they have encouragement to come in. So that you open the two arbitraging machines, one through the FI and second through the domestic, in a limited way. So that is work in progress. So, but then what will happen is that India will remain expensive, and India will keep getting DI in a very sequential way, increasing number. As the GDP rises, the contribution here will come. Third, what has happened is the interest rates have come down. If you look at your savings deposit, you get about 2.5%, 3%, something like that.
Yeah.
So obviously there is no encouragement. Your inflation is 3, 4%, 5%. There is no encouragement to the people at large to actually go and deposit in banks. And now digital system and the marketing of mutual fund Sahiya is so intense that people are getting aligned to sending money for stock market. So I think we are passing through multiple forces. Most of them positive, except for FI is going out.
But have you observed active retail investor participation coming down? There was NSE data that shows active retail participation has come down in the last year.
I can tell you we run one of the largest broking,
exactly,
active broking that too, with a 98% pin codes all over the country. My March revenue from broking only is 37% higher than last year's March.
What are you saying? Well, that's the data from the horse's mouth. Hiral there.
Hi Ramdevji.
Hi.
I've been following you since years, and I've seen a knack that you have to even pick companies from the unlisted space. You identify gems over there even way before they are in the IPO stage. Now, the unlisted shares market is also something which is growing rapidly right now. Data, obviously, it's unaccounted for. There is no data to prove as to how big that market is. My question is, for example, a company like Lahori, that Motilal Oswal has, is looking at. A good way to look at a company like that, and in the past, we've seen something like a Manpasand also. Now, lot of learnings that come in, right? But because of one episode, you cannot stop looking at that sector or a company like that. So if you have to look at both of these scenarios, and the kind of knack that you have, what would your learning be to a retail investor who wants to learn to identify companies and learn from their mistakes?
So, do I have to talk about your Manpasand and Lahori?
I don't want to talk about the companies.
Yeah.
So, how do you learn from your mistakes?
Yeah. So, learn is that, I mean, manpasand kind of, I personally lost a lot of money.
Yeah.
So, your assessment of the person goes wrong. See, businesses is fine. Businesses will go up, down, their tailwind, headwind, margins can go up, sugar prices are up, pricing, that can happen, But when the guys are crooks, I mean, very rarely you get that level of, kind of fraud in your investment. I mean, probably this is the only one of this order. So it happens.
No, but in such a vast history of investment, these examples are going to come about. You're not going to get them all right.
Yeah. So yes. So this was one of them. That doesn't take away my process in the sense that we went through an entire process. In fact, my research in that company was most intensive, I would say, and we were literally talking to all the established investor, private equity investor for 5-7 years, and yet they couldn't catch it. So that's fine. I mean, that happens. This guy must be very smart. But now coming to any other company, see, one of the opportunity in Unlisted is that you get access to a lot of data, and the companies are not that big. They are at nascent stage, so you can ask a lot of questions and you can see the path ahead, and then they need a lot of guidance, so you can buy at reasonable prices, and typically they will go public after 5-10 years, so you have buy and hold. See, real investing is necessarily at least 5 to 7 years. If you want to be a true investor, at least few years time has to be given, 3 to 5 years, 10 years. If you're not giving that, then you're kind of a semi-speculator, I would say. I mean, if it turns out lucky, you buy something and it flies 5-10 times in next 1 or 2 years. That's what people love. But that doesn't happen every time. I bought Bharti at $25. In 2 years' time, it went 25x. So, but I didn't buy thinking that it's going to go 25x. I bought it for doubler in 3 years, and I wanted to sit through 25 years. See, starting point thought process is one, and what really happens later on, because the events you don't have control over the events. So I think you have to have a process of investing, whether it is listed or unlisted. We call it QGLP. So if you follow the QGLP process, there's enough material out there.
What is QGLP, sir?
So quality, growth, longevity at reasonable price.
Okay.
So after doing I'm doing this wealth creation studies every year. So after, I think 20 studies or 18 studies, we wrote in 2014 that we have found our mantra of investing. Okay, that is called QGLP. We quoted it QGLP so that it becomes easy to this thing. And then even now, after 12 years, I can tell you it is a fantastic piece of research. And I use that only. So when I'm looking at a company, I look at quality of business, quality of management, longevity, and reasonable price. That's it. But I don't go to the price. See, the problem is most of the so-called investors, they start with the price without knowing what they're pricing. How do you price?
So there used to be a QSQT, now it is QGLP.
For me, it is QGLP all the way.
Okay, talking about lessons in investing, I'm just going to take a viewer question and we're mixing it up as well. So Ramya Srinivasan has written this question. I thought it was an interesting one, saying, when should an investor consider exiting a position even at a loss? This kind of a decision, I think, is also a mindset decision, not just a price decision. वो दम होना चाहिए.
दम नहीं,
या गट्स होने चाहिए.
हाँ नहीं, ऐसा कितना क्या गट्स. आप 25 पोजीशन लिए हो, उसमें एक पोजीशन खराब हो गए तो क्लीन द डैम थिंग, उसमें क्या है. सो Phil Fisher, this is a Phil Fisher dialogue from Common Stocks, Uncommon Profits. He used to give 3 years. He's one of the finest growth investor, I would say, and who talks about investing. Buffett, he talks a lot of big things, but he doesn't give you those, how-to types, So this Phil Fisher says he typically used to buy for 3 years. He will give any thought process you have developed, give a time of 3 years. Say if any company you think it is going to go from, say it is growing at 25%, so in 3 years time it will double. So you buy a bank which is earning, say, 2,500 crores, and you think in next 3 years it will go to 5,000 crores profit. But 3 years will take 3 years. So you buy today at, say, 20p or 25p and wait. And then things work out better than your expectation or worse than your expectation. If it works out better than your expectation, you double up position. Because your depth of knowledge will keep increasing after investing. So you have researched to some extent as much as you can, but actually real research starts happening once you have put in money.
Yeah.
Because see, life of the even life of the companies are not in the hands of the promoter.
That's true.
A lot of things happen which
There's
is
so many
beyond
external
you.
factors.
External factors. So external factors, if it turns out to be very, very favorable, Abhi, if you're in packaging company and suddenly this Iran thing happens, I mean, you never thought that there will be such a problem that raw material prices will go up by 50%, my working capital requirement will go up by 50%, where do I go? So it changes the outlook.
You think MSMEs will take time to recover? Even if we do see some kind of ceasefire extension, etc., fact is crude is still at 95, 96, not at 76, 80 levels. So that some of the damage has already been done.
Yeah, definitely. Every day, every minute is damaging. So in businesses, you miss a quarter, you miss a... So then it starts calling on your reserves or your margins, existing margin. If you're running 10% margin, it will become to 8%, 7%, 6%, or maybe if you're 5% margin, you're vulnerable. So those things happen. And a lot of the marginal companies, weaker companies will have tough time in, starting now for 6 months.
Yeah, so next 6 months is going to be important. Okay, Mahima there waiting patiently.
Yeah, so you talked about how you're bullish on financials right now. When you say from a 10 years, lens right now, are there any emerging themes that you're looking at? Let's say green energy, data centers, AI, anything particular that you're tracking actively, and you think that in the next 10 years, these are the themes that, would bring in a lot of money?
Yeah, so actually I don't pick stocks directly. Now I invest in my own products, Motilal Oswal private equity or mutual funds, and also I'm not that much on stock picking, but something comes along, I still take interest in reading the balance sheet, meeting the management, those kind of things. But I see growth all over, particularly capital market. Finances, lending is one thing, but because there's 3 million customers we are getting every month, there's a very explosive growth in the capital markets. Explosive, that's the word. It's not even linear growth, it's exponential growth. So your AMCs, broking, depositories, exchanges, God knows how, if the rules, nothing changes, I think they are sitting on a literally, path to heaven.
Are there any overhyped stories you're seeing right now where you think that the optimism is not warranted?
Stock-wise, there could be, but not generally.
In terms of space, sector, is it defense? How much more of an upside? Green energy, for example, idea is good, but ho kya raha hai? Solar, I'm just giving examples. Is there anything like that?
It's not grossly overpriced or overplayed theme types, Like in 21-22, there was the digital, which is just, so even digital companies, internet companies, they are quite corrected, So I would think that broadly market is very balanced, so to say. So it's not very cheap. At 21 times multiple, it's a fully priced market.
Yeah, but how much quick commerce can grow, for example? How much of these can grow? People are wondering, when will profitability come? You've always been a believer in that space. There are enough on the other side who say that, loss-making company, bar fund utha rahi hai. What does it really mean?
No. I generally don't buy companies which are making losses, but here I think there is a consumer shift, the way we run our household. I think that is undergoing change, and that is not going to reverse. And the category is very large, and so one has to see how the accounting happens here. They don't have stores, so it's a cost. So there is a cost of acquisition of the customers. How much you have blown. See, you have to see if you are building a 50,000 crore turnover business, how much you have spent. If you do it through the actual stores, how much it would have costed? It would have costed you 15-20,000 crores of stores to do those 50,000 crores turnover. Here it has costed you 8-10,000 crores of losses to get you all onto the online. So, it is the way you look at it. And when you build a store gets capitalized. Whereas here, entire thing goes in the P&L. So that's what the loss you see. If by chance you force the store companies to write off their store also in the P&L, the numbers will look very different.
Oh, that's a good way of looking at it. Have you seen your own habits shift? Do you order a lot online?
Yeah, I don't order. I see in my home things coming in, but my daughter-in-law runs only on one of the quick commerce.
Yeah, that's completely it.
Yeah, so younger people, they are far more aligned. My staff is far more aligned than we people, but Yes, but then I know, I have all the app here.
I'll tell you the reason I asked this question. When you are spotting opportunity, do you also take away from observation, what you're seeing around you? And then of course you have to go and look at what the company is doing, how the management is, the numbers, etc. But how much of a part does that play, the skill of observation?
Yeah, so see, I think observation or common sense,
Yeah.
The common sense is, you can't take away common sense in investing. That's the most important part, and that's where you get conviction, and you have I would say conviction. See, like all these companies are making losses, but I have in my portfolio all three of them.
So some of that conviction comes from what you're observing around you.
Yes, if nobody's using quick commerce and then I'm holding the stock, then I'm in deep trouble. But if they're growing at 100% every now and then, we are using it. And crazy things are herbal on this thing on the go. So I think, but it's speculative. It's not a classical my type of investment. I don't buy things unless there is a profit and growth in profit. So this is not my type of investment, but sometimes you take a punt.
Wow, I think ever since you took this punt, it's all proven right so far. I don't think there's anything.
Nothing like that.
At least in this space, it's not been.
No, like
or you think the verdict
we are
is still
underwater in what is that other third one? Insta, Swiggy, yeah. So because there is so much of competition and all, so it's not that it has made money or anything like that. It's nothing, but it is very exciting space. See, it's again 10-month and 10-year dialogue. If you're buying for 10 years, I think you could be sitting on some fancy gains, but on 10 months, God knows whether we'll be profitable or loss making.
Yeah, the idea is to have that patience. Varsha.
Hello sir, pleasure to have you. My question is related to valuation. Suppose if a company is available at 80, 90 PE with a growth visibility of over 5 years, should investor invest in that company or should give a pass on? Why I'm asking this is because even if a single bad news comes, the stock will take a massive hit. So what should an investor do in that situation, considering the growth visibility over 5 years?
What growth visibility? What level of growth?
Say the company is going at 35-40% for the next 5 years.
40%, then it can sustain for 90p.
Even if the bad news comes?
Yes. No. But growth should come. See, if the bad news is related to growth only slumping, then obviously the stock will suffer. But if the growth continues, but there is the Iran war or something, then it will suffer for some time. It will come back very quickly. Then the stock deserves to be at 70-80p if it is growing at 40% for next 5 years.
I think the big distinction over there to highlight is that is the bad news because of something endemic to the company, a problem that is within, say, the management or the kind of business or a tectonic shift, or is it an external one which can come and go? I think that is important to differentiate.
Yeah, see, earnings is the core of valuation. If the earnings is not impacted, but external forces are, FI is selling, this is selling, that is selling, but earnings are intact, I don't care who is coming and going. Someday the guy who was going out, he will come in a rush, So tomorrow things may change. India might emerge as the only country to go to. So then what do you do? Then everyone wants to, see, today only DI is buying. Tomorrow if by chance situation comes where DI and FI both want to buy, where are the stocks?
So, just to come back, and you gave very important data points from March as well. Do you think that fear of what will happen with the SIP loyalists is overblown? I was looking at one report today which said Nifty SIP returns for investors are at 0 for the last 3 years.
Yes, it could be.
Not everyone has that patience to stay on.
Yeah, so market can go through further correction. But 10 years henceforth, the market where it has to go will be there only. In between, say, so for last 1 year, market has done nothing. For last 2 years, I think it has done nothing.
Yeah.
1.5, 2 years, it has done nothing. Maybe another year of consolidation.
You think another year of consolidation?
I don't know. I don't know. I am looking at my companies which I have invested in, whether they are growing at 20-25% or not. My job, see, this market thing is just a time pass, I am telling you.
Kya baat kar rahe, sir?
It's complete time pass. It's made for NDTV Profit and CNBC only.
No, it's a lot of people sit and watch what we do. So you're saying market outlook is not something you're worried about at all. If I were to ask you like next 12 months,
who is going to give me 10 years market outlook?
No, 1 year, 1 year outlook. 1 year
but
outlook
I bought the stock for 10 years.
Okay. You know, there's one. I know we've taken a lot of your time, but there's so many queries coming in. So just a few more I will take. So from Chennai, B. Soumya is writing, what's a sector people are missing today but may dominate tomorrow? Anything that you have spotted which maybe B. Soumya from Chennai has not?
I think capital markets.
Yeah.
People have done well, exchanges have done well, BSE has done well. BSE, for your information, for last 6 years, the fastest growing company. It has grown double every year. Double every year, you imagine. From 9-10,000 crores, it is up to more than 1,10,000 crores or something.
And you're going to have...
And we're just watching like that.
But you know, scarcity premium will go when you have another player which will list.
The game is going to become so much bigger. They're going to mint money. It's all free cash flow machine. All 140 crore Janta are going to trade only in these two exchanges.
You think there'll be a time when 140 crore Janta will trade? Because
right now we have a demat accounts of about 220 million. In 2020 we were 40 million. Now we are 225 million. I think we are going to be 500 million demat accounts in next 5 to 6, 7 years. Will be the more I can bet will be the most crowded retail market in the world, capital market in the world.
Most crowded capital market in the world. Do you think the Indian investor has the stomach to also see losses? My question is this. Usually we used to see, and do you think that's changed as a trend? We used to see the moment there is sign of trouble, people would stop talking about markets. There was a time a few years ago, you know, even in parties and conversations, people are saying, okay, what's happening with their portfolio? That has quietened down a little.
So one of the what you call new thing is that 80% of the market is new. See, only 40 million demat accounts were there in 2020. So I would assume that they had some legacy, 3, 4, 5 years of the same. The guys who opened the account only in 2020, so they are at best 5, 6 years old.
तो डर तो लगेगा।
हाँ, तो डर तो लगेगा। और अभी क्या, अभी भी पहली बार बाजार करेक्ट हो रहा है। See, हमने तो बहुत करेक्शन देखे हैं. Like I started in 1990 when the index went from 700 to 4200, 7x, and then it crashed 50%. Then we waited for 10 years. Then Y2K happened. From there, again it went double and again crashed. Then mother of all the bull run happened, GFC from 2003 to 2008. Again market went from 3,000 to 21,000. Again it crashed by 50%. And from there, here we are. So I think let these guys who are coming now in last 5 years, they must also know market goes down. Who is going to tell them? Unless they go through themselves.
Yeah, market is teaching them.
Yes,
so
market is teaching them.
We have two quick, you know, just in time of what we were talking, Rajesh from Noida is asking, long-term investing versus profit booking.
What to follow?
What to follow?
No, both you have to follow. See, long-term investing doesn't mean that you don't have to book profits. I bought say Bharti in 2003, thinking I'll double in 3 years, but it went 25x in next 3 years. So I had to sell because there were developments which I didn't like. Say the scam happened, 2G scam and all those things happened. I said, boss, enough is enough. हमारा 25 गुना होगा, भागो यहाँ से. We sold that. But
no,
I had bought it for long term.
No, but if those developments had not happened and you were sitting on 25x.
Yeah, I sit in so many companies 25 years. Today also I am sitting with companies for 21, 22 years.
Can you name, I know you can't, but anything which you have
avoid.
20 year.
21, 20, 23 years. And I think it is as cheap as when I bought it 23 years back.
My God. I know you can't give the stock name, but that would be, I'd love to know. Anurag.
Hi, good morning, sir.
Hi.
So we are very young investors. We have just started. So one thing that we have learned is diversification. So in terms of assets particularly. So in these AI-driven economies, do you think commodities are still the place, the safe haven tag that we have with gold and silver? Should we still look around that, or equities should be the preferred bets for us?
Yeah, so you do what you understand. See, don't go by textbook and don't go by what this television guys they keep teaching you.
Sir, he works in the television company.
Go by what you understand. I mean, listen to all of them. But you have to, when they say something, all kinds of experts come. Gold expert comes, commodity experts comes, your real estate expert. They'll bring best of the experts. But आपको तो बात उसे समझ में आनी चाहिए ना. आपका पैसा है, वो तो चला जाएगा बोल के. आपने लगा दिया रियल एस्टेट में, मालूम पड़ा आधा हो गया भाव. So किसको पकड़ने जाओगे आप? So you have to go by your own understanding. जैसे मेरे को खाली इक्विटी समझ में आता है. मैं किसी जन्म जिंदगी में दूसरा कुछ नहीं खरीदने वाला हूँ.
Okay.
I'm going to buy only Indian equities.
Okay.
Even to go out of India also, I understand equity. I can go and sit in New York and make some money. But I have to go and sit there to get into American markets. मेरे पास वो time है नहीं. I'm pretty happy in India. So I have kept India as a country and only equity. But that is not advice to you. You must go by your own skill. If your father is in real estate and you understand real estate well, go and do it.
Okay. So what about the service class then?
Pardon?
Because what about the service class? We see gold returns like going 100%, but in equity we're going only 10-20%. Then how do we compare and how do we look at the horizon?
Try to buy what is unpopular. Don't try to buy popular.
Okay.
You know, just on the part about you going and sitting in New York, there was a report today quoting a very prominent market voice, and the quote was that his 50% of his portfolio is now outside the country. Not because he's bearish or wants to exit India, but 50% is now outside the country because he's thinking India is kind of tapped out. Do you see any of that?
We'll see after 10 years. Whether he wants to come to India or I want to go to America.
Okay, we will not definitely wait 10 years for our next interview with Ramdev Agarwal, but I want to thank you profusely. I know we took more questions and more time over here, but you've been very patient. You've answered not just our, young investors in our newsroom, but our viewers as well. Thank you so much, Ramdev.
Thank you.
Thank you.
It's a pleasure.
All right, we'll take a very short break, but all the action continues on the other side on NDTV Profit.
Most important, and you have to be bullish when actually markets are bad. In bullish market, to be bullish is not a big deal.
Should we look at blue chips with the same awe that we used to?
So even if you are the bluest of blue chip, and if the valuations are upwards of 50-60 times, and the companies are glorifyingly growing at 5%, just run.
The argument is being made that because of geopolitical factors, etc., valuable companies in India are available at rates they haven't been for several years.
Yes. That is what you should have independent mind. Market is going this side, left side, you should go right side.
By what logic am I going to sit there and talk to Jaydeep at Rebel and believe that the world is going to move to cloud kitchens as a word hadn't even been defined yet? Ajit, Ferlenko, furniture rental. We gave him $6 million. He took $4.5 million of that and bought wood and nails and started making furniture. Most companies we give money to turn around and give the money to Google and Meta and start buying advertising. But the chaos that we live in here on a day-to-day basis enables so much great opportunity.
You've been on both sides of the table, right? Asking for funds and then giving them out as well?
A friend of mine and I had an idea that let's build a digital music business. And this is forget iPhone, pre-iPods, right? So, and you talk about timing and the importance of that. We were so early.
There's no real compulsion for you having to come to India and start a business here.
And if my job at ICICI was find new opportunities for us to leverage what we know to build, so look, why don't we go build everything we own? So in June 2005, again, not knowing anything about anything, I moved to India.
presented by Canara Bank. Together we can.
Big conversation this morning with Vikas Kumar Jain, Managing Director and Head of Research and Strategist at CLSA India. Vikas, great to have you on NDTV Profit. As always, I'm going to start an overview of how you're seeing the relief that we see on our screens for the last 6-7 trading sessions, and not in a short-term manner, but in a sense that do you think a case is now being made for foreign investors to look at India again?
Hi, thanks for having me. So, I'll just take you back to the real record high that we made about 18 months ago or so. We actually got quite worried at that point of time in one of our reports that we wrote, and we started getting very worried on India at that point of time. 3 reasons why we got worried. Number one, we were at nosebleed valuations on an absolute basis versus our own history, versus bonds, versus other markets. Secondly, we have this proprietary sentiment gauge, investor sentiment gauge, which was at an extreme bullish point. And thirdly, this was the point when narrative to us was like, nothing can go wrong with India. Everybody wanted some bit of India, and India was possibly the favorite market for everybody. If we come fast forward to today, all of those 3 things have changed. Some of them drastically. What has drastically changed is firstly sentiment. Our investor sentiment gauge actually made a near record low of 1% bullish from being 97% bullish 18 months ago. We've only gone this low or lower during GFC and COVID. So this is near record low sentiment. Our narrative has completely turned on its head. Nobody wants any bit of India. There's so many multi-country fund managers or fund managers who working with multi-country funds. When we speak to foreigner India fund managers in foreign houses, and they've kind of joked with me that even if I don't go to office, no one will notice. It's the demand for India has gone down dramatically. So that narrative is completely flipped.
But may I ask why, Vikas? Because my counter would be, you look at the latest IMF data, India still is projected to be the fastest growing economy in the world. One of the few economies where the GDP projection has actually gone up instead of down. Many would argue that we've handled this war situation well. We're in talking terms with Iran and the United States, one of the few countries that managed to get our LPG and crude out. What is the reason that these managers are telling you?
Well, I think you can count several reasons. I mean, how it started was the driving global bull market story were certain trends like AI, where although we are talking of near-term GDP growth, the narrative in that story is about how the world is going to change in slightly more medium-term perspective. As long as people believe in that story, then people will not pay so much attention on what happens very near term, number one. Number two, in very simple stock market parlance, there was a time when earnings growth in other markets was clearly lagging. On the back of whatever's happening on this story and a general cyclical pickup in other markets, India's earnings growth no more shows up as the top 1, 2, 3. That is what was happening through the period from 22 to 2024. So I would call a large part of this normalization. The narrative shift keeps happening from here and there, from time to time, to explain performance. What has happened, the complaints on India was also to do with valuation. That was the third point I was coming on to. Absolute and relative valuations have now come down to clearly more palatable levels, below 10-year average levels, around 10-year average levels. The lowest we've seen post the COVID rally started. So at least that complaint is lesser. So now one can argue that India can slowly start coming back as a discussion point. What is left is the whole narrative bit, which will take time as performance catches up. It's quite heartening to see that we've had a 10% rally in this move already.
It certainly is. And Vikas, Alex here, I'm wondering, a part of that narrative, of course, you've spoken about the India angle, but the other angle is the continuation of the AI trade. And we're speaking the morning after. You have Allbirds, a shoe company that has gained as much as it has because it's pivoted to IT, or rather AI. And I'm just wondering whether the narrative might just be inflated. I'm not necessarily commenting on one company and whether or not it will find success, but just the thought of a shoe company pivoting to artificial intelligence, computing, and gaining as much as it did.
Sure. I think that narrative will take a much longer part than what we have time for. Essentially, my simple takeaway over there is, what do you think AI is likely to be? If you believe that AI will be a tool by which it kind of solves all global problems on its own, it doesn't require any kind of human interference, then, of course, all markets where we expect more working age population kind of rising will be in trouble. However, if you believe that AI will be a tool which will be used by humans to improve efficiency, and there will be human interference, somewhere in that interface, human helping you use this tool better, then I think India can pretty much be a handy force to allow to build solutions on the back of this AI. So I am a believer on the latter, and that's why I believe a lot of what we are seeing is more a fear of India being left behind because of whatever's happening. See, we are at this stage of experimentation where trillions of dollars are being thrown just to see which model works. At this point of time, a market like India or an economy like India cannot afford to lose that much money. But once a model which is usable comes in, we will definitely be there to find better ways to use it more efficiently, to find more economical solution. And those solutions at the end is what will matter to corporates in general and to economy at large.
Most important, and you have to be bullish when actually markets are bad. In bullish market, to be bullish is not a big deal.
Should we look at blue chips with the same awe that we used to?
So even if you are the bluest of blue chip, and if the valuations are upwards of 50-60 times, and the companies are glorifyingly growing at 5%, just run.
The argument is being made that because of geopolitical factors, etc., valuable companies in India are available at rates they haven't been for several years.
Yes. That is what you should have independent mind. Market is going this side, left side, you should go right side.
By what logic am I going to sit there and talk to Jaydeep at Rebel and believe that the world is going to move to cloud kitchens as a word hadn't even been defined yet? Ajit, Ferlenko, furniture rental. We gave him $6 million. He took $4.5 million of that and bought wood and nails and started making furniture. Most companies we give money to turn around and give the money to Google and Meta and start buying advertising. But the chaos that we live in here on a day-to-day basis enables so much great opportunity.
You've been on both sides of the table, right? Asking for funds and then giving them out as well?
A friend of mine and I had an idea that let's build a digital music business. And this is forget iPhone, pre-iPods. right? So, and you talk about timing and the importance of that. We were so early.
There's no real compulsion for you having to come to India and start a business here.
And if my job at IIC was find new opportunities for us to leverage what we know to build, so look, why don't we go build everything we own? So in June 2005, again, not knowing anything about anything, I moved to India with a BlackBerry, a laptop, a sample term sheet, a sample diligence book, and they said, good luck, call us if you find anything.
Talk to me about Dunzo.
We weren't the right investor for something like quick commerce. I would say Dunzo did an amazing job as being a brand that people loved, really did a great job of creating a brand. They did a...
देश की माताओं, बहनों और बेटियों से बात करने के लिए आया हूं। आज भारत का हर नागरिक देख रहा है कि कैसे भारत की नारी शक्ति की उड़ान को रोक दिया गया, उनके सपनों को बेरहमी से कुचल दिया गया। हमारे भरसक प्रयास के बावजूद हम सफल नहीं हो पाए। नारी शक्ति वंदन अधिनियम में संशोधन नहीं हो पाया और मैं इसके लिए सभी माताओं, बहनों, उनसे मैं क्षमा प्रार्थी हूं। साथियों, हमारे लिए देश हित सर्वोपरि है, लेकिन जब कुछ लोगों के लिए दल हित सब कुछ हो जाता है, दल हित देश हित से बड़ा हो जाता है, तो नारी शक्ति